I was broke watching candles in a dim lit room. Now the charts still like rockets when the green lines zoom. Every day like a whisper saying buy me soon. While the bears in the comments yelling market doom. I don't gamble with luck, I calculate the storm. Like a captain reading tides when the waves get warm. Volume spikes like thunder when the bell gets strung. And the tape starts singing like a loaded drum. Style loss is tight like a seatbelt click. Why do weekends fold when the market gets slick? I've been studying patterns like a code in the sky. When the breakout hits, it's a king supply. Every red day's just fuel for the climb. Every scar in the chart turn gold over time. If the market's a jungle, then I'm built to survive. Turn a spark in the trade to a fire in my life. Light it up, trade like king, yeah, yeah. 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 Oh, trade like king. Market open like thunder when the bells scream loud. Got the wolves on the floor and the sharks in the crowd. But I move through the chaos like a ghost in the tape. Every wick tell a story, every level escape. Resistance like walls, but they crumble in time. When momentum comes rushing like a runaway rhyme. Every trade like a blade that I sharpen alone. Now the market paying rent on the throne I own. Got it up, trade like king, yeah, yeah. 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 Oh, trade like kings. Trade like king. Oh, 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 oh. Trade like kings.
Oh, brother, oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt, your Kohrs, and together we are the show. It is a beautiful Monday, March the 30th. We have 2 days left to somehow get profitable on the month of March. And if you're going quarter by quarter, January, February, March, you have 2 days left, today and tomorrow, to get yourself into the green. Or obviously, I hope you're already very much in the green. And maybe we just pepper on a little. Holy cow. Let's get a little coffee in here, dude. Not that I've already had enough, but let's obviously have a little bit more. Why is the market running without us? I'm in it. I don't know about you guys, but I caught it. And actually, as I'm saying that, you know what? I don't even know if I have time to do this full-on intro because you guys might want to see what's going on. Is this the right one? No, I need to do this one. This one. I already caught it, and it looks like it's coming for me, but that's all right because I already have my stop in the money at 675. So as to why is it, literally you're about to watch my fill. Man, I was really hoping that this would be a gnarly lock-in of 1,000 plus, 2,000 plus, but it looks like it's coming for me. Maybe I'll get lucky. Maybe there'll be some buyers stepping in right below 500 to keep it above. But as you can see, I got into these positions. I built a position between 750 and 801. I unloaded one of these to get out at break even. I unloaded another one to get in a little profit. And then this final position is a runner for me. If you guys have a question of what I'm trading, obviously I'm trading the NASDAQ as I always do, but I'm trading the NASDAQ futures contract, aka NQ. And as to why I picked a bullish position, Well, around 7:26 this morning, Trump announced something that was perceived to be bullish by the market, obviously, because we ripped from 470 all the way up to 570, a quick little 100-point pop after the market already went up quite a bit. I mean, let's see how low this actually got over here. We were, it depends on where you're really looking at it, but obviously we were hundreds of points lower, and I just lost the connection, so that's not good. Did it reconnect? Anyway, we were already trending up and up and up, so obviously these 100-point added onto it. Hang on, I need to double check which one. Oh, TPT got disconnected. Well, reconnect. Reconnect, please. Has 5 open positions. I don't know what to do. And that's my lead account. All right. We're having a little data issue, but let's see if we could get this reconnection going. Come on, reconnect. There we go. All right. Everything is back hunky-dory. But anyway, there was an announcement, and this isn't a political statement of if you want to perceive it to be bullish or not. I'm just telling you the market perceived it to be bullish. But because of all the whipsaw and stuff that's been going on lately, I didn't want to chase it right away. So I waited, thought I finally saw some strength. A good 10 minutes later, bought, sold, obviously locked in a bit of a profit, and now my stop is just it's nicely in the money, 675. As you can see, 675. So that on these 2 evals for Legends, that's going to guarantee about 900. And then obviously on these other ones, 675 minus that, so it's going to guarantee 500. So obviously I don't want to get knocked out right now. I would prefer that this obviously turns like immediately right here, but it's about to knock me out. So we're starting off the day. We're starting off the week. We're almost concluding the month in the green on this particular trade. Like I said, yes, I obviously wish it would keep going, but at the end of the day, I'm not in control of that. So knowing my luck, it'll knock me out. This will be the bottom, and then it's going to rip. But right there. So that was the first trade of the week, the first trade of the day. So on some of these new evals, locking in 900, and then on all the other ones, and this was just due to buying the evals a little bit later, so they did a bit better, but locking in just below 500 on all those accounts. Now you might be thinking, Matt, why did you not trade on Lucid? I will be telling you why I didn't in a little bit. And then also same situation here on FFN. Why did I not trade on those? I'll be breaking all of that down in 1 second. So just wanted to share all of that with you. And just while we're here, before I kind of get you guys ready for the day, let me just make sure. I was going to say, let me cancel all these orders. Uh-oh. Why is it showing orders that are not there? Cancel order. Okay, well, that's not necessarily the most fun situation. Why do I have rogue orders that I can't cancel? Cancel order. Positions. Okay, it thinks I'm in positions. So there's some sort of weird mismatch. You know what? Just to be safe, what I'm going to do, let's save the workplace. Let's kill the whole program, and then let's just restart it. I'd rather do this now than before the market opens. Let's just get this locked in now. Let's take care of this issue. Well, we still have about, 20 minutes to go until the market opens. All right, so that's rebooting. And while that's rebooting, this is a good time for me to actually get you guys prepped up for what in tarnation is happening today. So you can see the SPY obviously took a pretty big hit on Thursday and Friday, and we're starting to bounce back a little bit. Obviously, I'll be the first to admit that percentage-wise, it is not the biggest bounce back ever, but hey, we're starting to see a little bit of green, so I'm going to take it when I can get it. So a little bit, obviously, we are opening above the low and the closing value on both the SPY and on the NASDAQ, the Qs. Oil is unfortunately holding pretty high still here at 101, and then Bitcoin is recovering a little bit closer to 68,000. Now, in short-term momentum, obviously 5 minutes bullish, 10 minutes bullish, 30-minute is actually trying to get bullish. I find this very interesting, especially as it relates to a potential Vanna rally, VANNA. So I'll be explaining that in 1 second, but we're going to say the same thing in the NASDAQ here. Obviously, in the very short term, 5 minute, 10 minute, 30-minute, the bulls are stepping in. Now, obviously, a logical question at this point is, will it hold? your guess is as good as mine. Maybe it will, maybe it won't. Recently, we've seen quite a bit of headline-related whipsaw, so that's just something that you have to be prepared for. Remember before when I joked that they're going to knock me out just to rip it anyway? That's pretty much what happened. It knocked me out at 89, and it went as low as 82, and now it's pumping up anyway. But whatever, I'm in the green. It's going to be what it's going to be. You can't cry too much over spilled milk. All right, let me get back to this and let you guys, just because we're not only starting a new week, but obviously we are coming to the conclusion of March, I want to do my job and just talk a little bit about seasonality here. Stock futures rise as Trump signals progress in U.S.-Iran war. So before we get into the seasonality, it'd be silly of me to not inform you that, yes, major headline news can easily override seasonality. So if we have the seasonally strongest, weakest, whatever day ever, but yet the news is the opposite, yeah, the news is going to obviously be a little bit dominant. So I just want to say that before we get into seasonality, but it just so happens that right now you have some bullish seasonality seemingly aligning with some bullish updates as it relates to the situation in Iran. So looking at equity clock, the end of March, the start of April, over the past 20 years worth of information is generally more bullish than it is bearish. Now, if we dive into more specific data over the past, let's go to weekly right here. The week we're about to get into is actually a bullish week. That's on 5 years worth of data. And on 3 years worth of data, once again, the week we're getting into, we're about to start right here, is a bullish one. Now, obviously the week after is bearish, and you might want to consider that with your swing positions. But I just wanted to let you know on a 20-year, a 5-year, and a 3-year time frame, the week that is about to start in 15 minutes, it is generally won by the bulls. Now, just because it's normally won by the bulls, that doesn't mean that has to be true this year, but I just wanted to put that on your radar. But obviously, as I've already alluded to, the situation has a lot more to do with Iran than seasonality. Oil prices rise with Brent heading for a record monthly surge as Iran enters the 5th week. So even though we're seeing a little bit of buyer step in the world of the S&P 500, which, hey, I'm here for it, I like it, I do want to bring to your attention that oil is holding very high. CL is the futures contract for crude oil, and it is currently sitting at 101. So above 100, when not long ago we were in the mid 60s. So just a 50% increase, maybe even more, 66% increase. We're not at the high, the recent high, I should say. That was around 119, but also the recent low was around 76. So we're a lot closer to the high than we are to the low. So I just wanted to put that on your radar. And obviously this is all happening because the Strait of Hormuz is a very important route, of literally how we ship oil. So if no one's going through, or if there's like a 99% reduction in the tanking ships sending oil, well, that's going to cause prices to go quite a bit higher. So here are some of the most recent updates. Let me pause that and make sure the audio is good. All right, so these are the updates as of yesterday and early this morning.
The arrival of a U.S. amphibious assault group and the entry of Iran-backed Houthi forces heightening fears of escalation as the war enters its second month. Still, President Trump keeps insisting that he's ready to make a deal, saying Tehran has offered further concessions on allowing oil through the Strait of Hormuz.
They've agreed to send 8 boats 2 days ago, and then they added another 2, so it was 10 boats. And now today they gave us as a tribute, I don't know, I can't define it exactly, but they gave us, I think out of a sign of respect, 20 boats of oil, big boats of oil.
Let's cross over to Dubai now and bring in our Horizon's Middle East and Africa anchor, Jumana Basachi. And Jumana, by all accounts, this is an escalation. Houthi forces raising the ante.
Yes, well, I will just say that going into this weekend, perhaps there was a sliver of hope that maybe the diplomatic channels would be reignited. And indeed, we did see some of it, but without U.S. and Iran representation. There was the summit that was held in Pakistan with the foreign ministers from the region, the likes of Egypt, Turkey, Saudi Arabia participating. But again, nothing really substantial on the diplomatic front, despite the fact that President Trump is attesting once again that Iran have come forward and accepted most of their 15-point proposals. Now, still, the rhetoric from Iran remains to be defiant, one that indicates that they're not in the mood to compromise at all. And the backdrop to all of this is we have an intensification once more of military operations, both on the joint U.S.-Israeli military strikes that are taking place around Iran counterstrikes on Gulf states in the region. Avril now was just talking about some of the aluminium smelters that were hit, main ones from the region.
Also
and
known
in
as
addition to
aluminum.
that, to your point, you had a new front open up. The Houthis, who so far for the past month have been quiet, have launched attacks at Israel, specifically targeted at Israel. And the question here is whether they may take it one step further and look to start targeting U.S. assets, or even look to once again start disrupting shipping along the Red Sea, which would pose a problem, not least for the energy markets, because so much of the Saudi oil, about 7 million of it, has managed to be diverted from that east to west pipeline. And if the Houthis were to start attacking ships there, of course, that would just be another blow for this energy market.
Once again, oil sitting at 101.
From Trump slightly earlier suggesting that could be a deal soon, but we have heard this many times before. Where are we with that?
Well, to go back to what I was saying, there have certainly been a lot of mediation efforts, and Pakistan have indicated that they are very capable and ready to host the talks. What we know from the Iranian side is that they haven't so far engaged in direct discussions, so they have actually said that the points of the U.S. have been passed on to them via Pakistan. So they are receiving the messages. But as of yet, there really doesn't seem to be any inclination that they want to return to the negotiating table. But of course, a lot of this is rhetoric. You don't actually know what's going on behind the scenes. And you also don't know, Haslinda, who exactly the U.S. are speaking to. Once again, in interviews over the weekend, President Trump referred to the fact that he's not even sure about the status of the health status of the Ayatollah. This is the new supreme leader, Khamenei. So again, it's not clear who exactly the U.S. side are talking to. And then the other signal that's coming through is the U.S. are deploying these extra military assets, these extra ground troops to the region. The first constituent of this Marine Expeditionary Unit arrived on Friday, 3,500 troops. Lots of questions about what the U.S.'s objectives are with these ground troops and whether or not we could be entering into another phase of the war that includes potential ground escalation.
I feel like that was a pretty good wrap up of some of the major things, but there is one little thing here. Trump threatens Iran energy sites if no deal reached on war. So the most recent breaking news is actually an update from Trump himself on Truth Social. As you can see, this came out at 7:26, and that's the exact news that popped the market all the way back here. Once again, 7:26. So I think what we just got from Bloomberg, like I said, a good, more holistic thing of what happened between Saturday, Sunday, and then early this morning. But for those of you who are curious, are like, no, okay, like specifically what was that pop at 7:26? The United States of America is in serious discussions with a new and more reasonable regime to end our military operations in Iran. Great progress has been made, but if for any reason a deal is not shortly reached, which is probably will be, and if the strait is not immediately, quote unquote, open for business, we will conclude our lovely stay in Iran by blowing up and completely obliterating all of their electric generating plants, oil wells, and Karg Island, and possibly all desalination plants, which we have purposely not even touched. This will be in retribution for our many soldiers and others that Iran has butchered and killed over the old regime's 47-year reign of terror. Thank you for your attention on this matter, President Donald J. Trump. So maybe you think this interpretation by the market is good or not, but regardless, this threat of saying, hey, you better sign the deal and come to the table and chit chat, because if you don't, we're going to destroy even more. Well, that's the exact thing that got the market kind of popping today right here at 7:15, the SPY and the Qs. So even though this is going up, That kind of explains why oil isn't going down. So the equities market is going a little risk on, but oil's saying, okay, that's not necessarily the best for oil. So once again, that is the most recent update to kind of put a bow on the whole situation. But other important things did develop over the weekend. Trump issues fresh threat to Iranian energy sites. Obviously, Wall Street Journal has a pretty good running update, so I implore you to check that out. Trump waged military operation to extract Iran's uranium. The president has made a decision, U.S. officials said, but he considers the risk to U.S. troops. So he's thinking not only the oil tankers that we just heard him talking about, but maybe we're going to take their uranium. Trump reportedly wants to take the oil in Iran as Tehran targets water power facilities in Kuwait. So maybe it's the same playbook as Venezuela here of like, hey, cool, we're there. We took out your leader, and now we're going to take your commodities. So just something to pay attention to. Pakistan prepared to host U.S.-Iran talks in coming days as Trump weighs deploying ground troops. So the ground troops is in reference to what we just read. And then Pakistan part is, we heard that a little bit on Bloomberg of saying, hey, like, we're willing to help you guys chit chat because you're kind of both dragging the whole global economy down with you. Remember, the longer oil stays elevated, that's going to have net negative impacts on literally the entire global economy because it's just going to directly cause more inflation. Just to, I guess, drive home the point that, remember, in this day and age, the way Trump and the administration move, it is never just exclusively one thing. So I understand for this is good reason that the Iran situation is dominating the airwaves, but please remember, it's not the only thing going on. And before you know it, we might be talking a lot more about Cuba.
And that Cuba will be next. What did you mean by that exactly?
Who will be next?
Cuba.
Yeah, Cuba's going to be next. Cuba's a mess. It's a failing country, and they're going to be next within a short period of time.
Just, at the start of it, she said, what did you mean when you said Cuba is going to be next? He's like, what? He's like, what did you mean when you say Cuba is going to be next? And he's like, yeah, exactly. Cuba is going to be next.
It's going to fail, and we will be there to help it out. We'll be there to help our great Cuban Americans out who were thrown out of Cuba. In many cases, their family members were mutilated and killed by Castro. Well, Cuba's going to be next, yeah.
And that Cuba will be.
All right. So still, once again, we're not getting direct answers of what it means, but obviously something to pay attention to. Government bonds rally around the world on slowdown concerns. So yes, oil's doing its thing, but it is probably worthwhile to pay attention to some of the other movement. And right now, we're seeing a little bit of a drop in yields and a little bit of rise in prices. So in the short term, TLT, which is going to be the 20-year bond ETF, it is up 1%, but overall, clearly it's been trending down. So I just want to put that on your radar that there are some, I guess, safety bets is probably the best way to describe it, finally coming to the market. Trump signs order to pay TSA employees after Congress fails to agree on DHS funding. Trump said his administration would use funds that have a reasonable and logical nexus to TSA operations for the payment. Homeland Security Secretary said the workers should begin seeing paychecks as early as today, Monday. The House and Senate ended the week by passing vastly different bills. Hot side topic here. I don't think they should be able to go on break if there is a partial or full government shutdown. So obviously with the upcoming holidays, Easter is this upcoming week. Just so you guys know, the market is closed on Friday in observation of Good Friday. I don't think any politician should be able to go home if the government is at all shut down or partially shut down or whatever you want to call it. I don't think they should be able to take a day off until they figure out whatever the hell is they need to figure out. So just wanted to quickly share that. Also over the weekend, there was a bunch of No Kings protests. Anti-Trump rallies pop up in thousands of U.S. cities for No Kings, and it's not just in the U.S. I saw that there are some in Europe, specifically England, and I was watching some videos of ones in London, which I myself got a little bit confused by because the last time I checked, they did, in fact, actually have a king. So kind of interesting for these places to be doing No Kings protests against Trump when they literally have a king. And then here in the U.S., I mean, I haven't checked for a couple days, but we still don't have a king. And I think a pretty good concept of the fact that we don't have a king or quote unquote dictator is the fact that they're allowed to protest like this. Because if you've ever read any history book at all, ever, if you're protesting against an actual king, an actual dictator in that country, generally they don't last too long, and before you know it, people start to disappear. So maybe someone in chat wants to explain to me what happened over the weekend and the purpose of it, but like I legitimately try to look into it, and depending on the protest that you're asking or the protester, they all had very different like opinions of the purpose of all of this. So in my best estimation, it seems very scattered of like the actual intent of this, to the point that it just changes from person to person and protest to protest of why they're there and what it means. So if anything, I'm just chalking it up to a good way to enjoy a nice day outside, you know, getting some weather, getting some vitamin D. It seems to be, if anything, something more reasonable to celebrate the fact that we're in spring and it's no longer horrible weather than anything else. But like I said, more than happy to learn from you folks in chat and explain to me what's going on, because like I spent time looking and I could not figure out what the hell was happening. With respect to the market today, obviously you have to consider any big updates as it relates to Iran. Chair Powell will be speaking at 10:30, so 1 hour from now. The chairman of the Fed is speaking. So we are going to be listening to that once again an hour into the market. Chair Powell will be speaking. So I want to put that on your radar. Tomorrow, Tuesday, we're getting some jobs numbers, consumer confidence. Wednesday, more job numbers, retail sales. Thursday, more job numbers. And then on Friday, we're getting numbers, but the market's also closed. Once again, the market is closed this Friday. Friday, April the 3rd, in observation of Good Friday. Yes, we are getting some reports, but the market is going to be closed. It's one of those like kind of half government holidays where some of the government's working and we're getting data, but then if you consider what else is happening in the world, the market's just going to be straight up closed. So it's kind of a weird half holiday in terms of who's closed, who's open. So big reports on Friday, yet the market will be closed. We are not in earnings season. There are still some earnings you might care about, so I wanted to share this with you. And then in terms of individual equities, I just want to let you know, Sora is now gonzo. The sudden fall of OpenAI's most hyped product since ChatGPT. So Sora, which is what people were using to do all these like video creations via AI, they are closing the door on that one. I'm a little bummed. They abruptly shut it down. I thought it was really cool, but maybe it was just consuming too much of their money and not even close to being profitable. But I thought what it was making was actually really, really cool. So just wanted to let you know about that. If you haven't already, sign up for the newsletter, mattkohrs.locals.com. It's in the description of the video. My mod will put it in chat. It's 100% free. You've never had to pay for it. You never will have to pay for it. There's no code or anything like that. Literally just drop your email and you're going to get these weekly updates every single Sunday, a breakdown of what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events, and then the seasonality of each individual day. Today is one of the singular most bullish days of the entire year. Today, Monday, March the 30th. Over the past 27 years worth of information, the bulls have won this particular day 74% of the time, as in they have a 24% edge, which is really good when you consider most of the time the market is 50-50. The profit factor is a sky high 8.75, which means every dollar spent in the bullish direction has returned 8.75, at least as it relates to the S&P 500 futures market. And then here's a look at the hypothetical equity curve you would have if you bought it open, sold at close on the S&P 500 futures market. It's pretty much up and away, and if anything, over the past 12 years, it's getting even more bullish. So once again, that is specifically for today. And remember, I give this information away for free. There's no coupon code, there's no upsells, there's nothing like that. Just put your email in and you can get this every single Sunday. Tuesday, leaning bearish. Wednesday, a bit more bullish. And Thursday, to wrap up the week, clearly bullish. And then, yes, the market is closed on Friday, which brings us to today. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly. And if not, have fun. All All right, if you guys see anything like crazy going on, crazy movement, stuff like that, please let me know. But there are a couple of the things that I need to get you guys prepped up for as the market is getting going. Just so you know, if you're joining in right now, I have no live position. I did take some trades today, decent trades, just below $500 per account on 2 of my new evals. I played it a little bit bigger, so I made pretty much double that amount of money. Once again, these are brand new evals, so I was intentionally playing it a little bit larger just because, whatever, they're evals. I'm a little bit more degenerate when it comes to them just because I can be. But we don't need that VWAP. It's too far away. Where's the other VWAP I'm looking? Okay, here we go. This is the screen I want just for now. Let me make sure my copier is up. Okay, couple things, I guess a couple housekeeping items, if you guys don't mind. Oh, wait, you guys probably do want options flow. Hang on. Let me get you degens what you're really here for. I know you guys are just stoked that I buy this data package so you can use it. I don't mind. Hey, I'll be a team player. All right, here's the data flow out of the gate. The SPY is strong out of the gate. The Mag 7 is actually kind of neutral, but maybe picking up right now. And overall, a clear increase in stability. I know in a vacuum, 20% is not high stability, but it's a lot higher than we used to be. I mean, over the past 2 to 3 weeks, every single day, the stability is between like 1 and 4%. So a huge increase to go from 2% up to 20%. So wanted to point that out. And then I also wanted to point out on a 0 DTE perspective, there's a lot of positive gamma as we get closer to 6,500. So that could be an interesting kind of magnet effect. Now, if we fail at any of these levels, you could see it's pretty choppy all the way down to 6,350. And then from there, it's free falling all the way down to 6,300. So I want to put that on your radar based on just a really true, like rudimentary rundown of some analysis here. 5 minute, 10 minute, 30 minutes all bullish. 4 hour is still bearish. Looking at the NASDAQ, the 5 minute, 10 minute, 30 minute is all bullish, while the 4 hour is still bearish. The daily is also bearish. So really your opinion on are you bullish or bearish is going to be hyper dependent on the time frame you're looking at. Right here, I could argue the 10 minute is strongly bullish, but maybe you don't care about the 10 minute. Maybe you care about the 4 hour. Maybe you care about the daily chart, and then you could rightfully say, well, this is clearly bearish. So just want to put that out of, remember, your bias on the situation is going to be very, very dependent on the time frame that you're particularly looking at. For me, and this is just my own opinion, I find that I have a lot more success when I consider more time frames. Specifically, putting a bunch of time frames together is where I find out that I'm doing quite a bit better. The other couple things that I need to put on your radar is, yes, there's an upside gap fill to 6474. This is the low from Thursday of last week, Thursday, March the 26th. If we get going today, 6474 is a very good target. It is an upside gap fill. Please mark that out on your chart. If you're looking at the SPY, the equivalent level would be 644.82. If you're looking on the Qs, the equivalent level would be 573. So those are all very important technical and kind of now psychological levels to pay attention to. Just so you know, there's another gap fill up even higher, but we could circle back to that if that ever becomes reasonable to chit chat about. Actually, is there one all the way back there? That one's a really close one between the 17th and the 18th. But for now, for the purpose of today's show, yes, if we get going, maybe that is something to talk about. Upside gap fill, the low from Thursday of last week. So that's from a technical perspective, something you have to pay attention to. This is like hyper nuanced, and this doesn't really come into play too often. But if you look at the calendar, for those of you who believe in the Gregorian calendar, and I know we're not going to fight about that today, is time linear? Who is Gregorian anyway? Why was he making a calendar? Why is October the 10th month? Should we stab the person who caused it? Well, good news. The reason October, oct, Latin for 10, or maybe 8, but it's the 10th month. Well, that's all because of Julius Caesar, and we're not going to get in on that one right now. But let's just, please, I don't want to fight with you guys. Let's pretend time is linear. Let's pretend that we're going to use the Gregorian calendar. For those of you who do, and I get that not all of you in chat do, Tomorrow is the end of the month. Tomorrow, Tuesday, is March 31st, and JP Morgan, the biggest bank in the world, they have a gigantic collar position that expires tomorrow. They don't do it on the options monthly. They do it on the calendar quarterly. So you don't look at the quarterly options expiration, which already happened 2 weeks ago. It's going to happen tomorrow. They intentionally do the end of the calendar month, and they do this every single quarter. And it's basically what they do is they go long the underlying, as in they're bullish on the S&P 500, SPX, and then they sell calls, and then they use the premium that they get from those calls to buy downside protection. So basically, you're long the underlying, you sell calls, covered calls, you take that premium from the covered call position, and then you buy free downside protection. That free downside protection happens to basically be this gap fill. It's structured at 6475. That will be live and in play until tomorrow. It expires tomorrow. And if you guys are curious about the position sizing, it's around 38,000. So it's a big position. But anyway, that's going to be in play, and it's going to have clear influence on market makers up until the play is no longer live, which is once again at market close tomorrow. But the other thing to consider in this is not only is it the technical upside gap fill, and obviously it has a huge influence on the market makers, but tomorrow, they're going to roll to a whole new position. So not only do you have to consider the gamma, delta, market maker influence of this position expiring tomorrow, but you also have to consider they're going to create a brand new collar position. Once again, a collar is more of an advanced options play where you are long the underlying asset, in this case, the S&P 500, but you could do it on anything. You sell calls against it, covered calls, and then you use that premium to buy quote unquote free downside protection by either going long puts or getting into a put debit spread. For those of you who are curious about the exact nuances of how JP Morgan does it, they don't go long puts, they go long a put debit spread, which is the exact opposite of a put credit spread. So once again, that will have, from the Greek perspective, and I'm not talking about those people in Europe, I'm talking about from the lens of market makers. From a Greek perspective, that will have influences today, but it's going to have even bigger influences tomorrow. And really where it's going to get crazy is not only does that have influences tomorrow, but they're going to roll the position and create a giant new one. So we're probably going to see the options flow at some point midday tomorrow. They tend to do it between noon and 2 is where you can like actually in real time watch the roll. There's no set like legal time. They're like, oh, we do it at 1 every single time. No. It's not like that at all. They kind of just seemingly do it midday. So that is something that you have to put on your radar for tomorrow. So obviously pay attention to the Iran Trump stuff. That can update at any moment. Right now, it's just we're in a very headline-driven environment. From a technical perspective, yes, we have upside gap fills. And then from an options perspective, we have a big JP Morgan roll tomorrow. From a seasonality perspective, today and this week are pretty bullish. Is that a guarantee? Well, no, obviously, Trump might really help that with commentary, or he might really hurt it with his commentary. But I do want to point out that we are classically in this situation where we have strong Mondays, Tuesdays and Wednesdays are chop, and then Thursdays and Fridays we really sell off. For the past 3 weeks, pretty much like clockwork, that's exactly how Trump has been running this show. Basically a gap down on Sunday, that's recovered. We end up having a strong Monday, Tuesday and Wednesday are chop, and then we sell off Thursday and Friday. Now, obviously, will that trend hold forever? No, that trend's not going to hold forever. That's just right now how Trump is kind of choosing to run this particular show. So I'm paying attention to it. It's somewhere in the back of my mind, but I understand that that's not something that's going to be persisting forever. So please be mindful of just, I guess, just put on your notifications. Whatever your favorite news source is, throw on your notifications so you can get updates whenever Trump either is or is not saying something, because both are pretty important. Today, please remember, in less than 1 hour and 50 minutes, Jerome Powell, the chairman of the Fed, will be doing a kind of a speech discussion thing. So we're going to be listening to that. Once again, that's at 10:30. And that's pretty much the skinny, not only for, I guess, kind of the week, but also the day and important things to pay attention to. So now, just for the sake of transparency, I want to give you guys some updates of what's been happening with my trading account. So right here on the screen. You can see I took a couple trades today. I am not trading the 7 PVs. Why am I not trading the 7 PVs? 7 PVs are the funded accounts at FFN, Funded Futures Networks. Right now, I have a payout for $10,000. $8,000 would be my split. It's an 80-20 split, but I have a payout request for $10,000 that is currently pending. And the rules of theirs is basically as the payout is pending, you should just wait. So that's what I'm doing. That's why I'm not trading the 7 PVs. On Lucid, I wish I could tell you guys I already locked in my 250, but I can't. I am now frozen out of Lucid. So here is what happened. Friday, after market close, I was feeling real good right here. Friday, March the 27th, around 7:30, I made the request. It was approved within like 5 minutes. Boom, money hit my account. Once again, this is all on Friday. And then a couple hours later, I got this email. I don't think you guys can see it the best, so let me see if I could just move myself so you can read it a bit better. It's time. You're going live. I got this email 3 hours after that, 2.5 hours after that. 10 p.m. on Friday, I found out that I am getting moved to live on Lucid. So we went from the evals accounts to the funded accounts, and now we're going to legitimate live accounts. So what does that mean? Well, that means, as you can see here, pause. I actually cannot trade on these accounts as I have to get them my information to get like legitimate live funded accounts. So pause. So as much as I wish I could have traded today and gotten another $9,000 payout, I just can't now. So I'm just similar to some of these other accounts, just like if you trade well enough, they're like, okay, cool, you're taking the money from us, we're going to push you live, and now you're going to be a legitimate prop trader rather than a sim-funded prop trader. So it's a cool goal. I kind of wish it happened to me today so I could have gotten another $9,000 payout, but at the end of the day, I just need to wait, and then in the live accounts, I could take the payouts, I suppose, when I want. So I just wanted to let you guys know, like I said, my goal is to be as transparent as possible. I'm not trading on the FFNs right here, the ones that I'm highlighting, because I'm waiting for a payout. And I'm not trading on the Lucids, the ones that I've been trading on all month, because they are moving me to live. And I guess it takes a little bit of time to get those accounts ready. Obviously, I can still trade on my Tradeify accounts. They're up a decent amount. Obviously, I want to get them up more. And then on the, I have 2 new evals. The ones that I'm highlighting right now, the LT ATA, these are the only 2 evals I'm trading. All the other accounts you see on your screen right now are funded accounts, as in I'm going for real money. These are the only 2 where I'm trying to run them up to 159,000 so I can get more funded accounts. The take profits are on a really good run. I have 2 brand new take profits today. You could see 3 of them, 165, 165, 165, as in a couple trading days, I have $15,000 of profit across all 3. So I made about 45,000 in profits. I could take out 10 from each. So I could take out 30,000 there today if I wanted to. And then I have 2 brand new ones right here that are both up literally whatever I'm up today because day 1 of trading them. So like I said, I just wanted to be as transparent as I possibly can. Do you like Tradeify 3.0? I don't have enough time. We could go through it live together if you want. I haven't gone through it yet, just because I've been way too busy over the weekend. Lots of life stuff going on for your boy. But anyway, I'm just super stoked about officially going live with Lucid. So Lucid, if you want to check it out, I went live with these flex accounts. These are the evals that I bought and then I got funded. I officially got $51,000 in payouts in the month of March. And in reality, those are the only payouts I've ever gotten from Lucid because I just started with them in February. So I started with Lucid in February, learned more about their rules and my trading style, finally got some good traction at the start of March, started taking payouts in March, and I've been ripping it all month. And across my 5 funded flex accounts from Lucid, as of Friday's market close, I officially secured $51,000 in payouts, and then they moved me to live. So currently paused with all of them. But if you want to take a stab at it, my favorite accounts, and this is just because it's best for my particular trading style. I'm not necessarily saying it's best for yours, but I use the Lucid Flex 150Ks, and right now they're running pretty sick 40% off. So it is pinned to the top of chat. It is in the description of the video. You could use that code Goonie. You could just go to the website. Goonie will get you the 40% off, and you're allowed to get up to 5 of those. So just wanted to share that with all of you. And in the meantime, the question is, are we bottoming out? So the market's been nothing but puke city, as you can see. I'm going to leave that there. But we puked from 23,540 to 23,375. So that's a pretty sizable puke. But why I'm saying, are we starting to show a bottom right here? Options puking. Well, maybe we're putting in this bottom here at 941. And then looking at the Mag 7, I'm also starting to see a recovery. So for those of you thinking, should I be chasing this to the downside? Well, maybe if you get rejected, but you might want to double check what's going on with options, because if the options delta keeps trending up, the options market's breaking the other way. So remember, I'm a trend following trader, and I do my best trading when I have more alignment across various things. So the more time frame momentum, simple moving average, exponential moving average, RSI, options flow, the more things that align for me, the more confident I could be in that trend. And then I try to get in the trend with reasonable risk. When it trends a little bit in my favor, I try to put my stop to break even, and then I just sit there. I'm going fishing. My biggest concept is, can I just go fishing for like the cheapest cost possible, as in the most minimal risk possible? And then from there, can I just rip it? So if you're just joining in now, first time, I have about a 50% hit rate, as in every other trade that I do is wrong. Most likely it's going to be wrong. So I'm right, I'm wrong. I'm right, I'm wrong. I'm right, I'm wrong. So I'm not some sort of lights out, he's right 95% of the time. No. I have a 50% hit rate. But the reason why I'm able to be so net profitable is because when I'm wrong, I try to admit that I'm wrong very early and only sustain a small hit. And then when I'm right, I try to ride it as long as I possibly can. My entire goal as a trend following trader is to have a very asymmetric win versus all of my losses. I'm not a person who goes for small gains, and then when I try to be right a lot, but then when I'm wrong, it's a big loss. No. I try to do the exact opposite. I try to let my winners ride as long as they possibly can. And when I'm wrong, hopefully I'm being a disciplined trader that day, and I could just get out of this situation quick. So do I always do that? No, I'm human, and sometimes I have missteps and days where I get tilted or I'm revenge trading or something like that. But in a nutshell, that is my general framework for active day trading, which is very, very different than swing trading, which is very, very different than medium-term swing trading, which is very, very different than long-term investing. I don't think you can really do the exact same thing across all timeframes. Of course, there's important things that are going to be true across all timeframes, like risk management. But in my opinion, the way you execute proper risk management is going to be very, very different based on the short, the medium, the longer medium, and then also the long term. So for short-term day trading, as it specifically relates to zero DTE calls and puts, or if you're trading futures, in my mind, the best way to be successful is understand that you're going to be right half the time, wrong half the time. That is fine. That doesn't necessarily have to freak you out. I know that there's a lot of people who try to teach you guys this, and they talk about dumb fucking things like your third trend line test, or here's your fair value gap, or your inverted value gap, or silver bullet, or I don't know, Mercury's in retrograde. They don't know what the fuck they're talking about. None of those people are net profitable. They're profitable in the world of trading just from selling courses. They're not profitable from their account. If there was something that legally forced everyone to show their actual live confirmed brokerage statements every couple months, every couple quarters, every couple years, you would be very, very surprised to find out that most of these people who show you their really, really cool pictures of Lambos and Ferraris are nothing but sim traders who are only making money off their classes, and they are not net profitable traders whatsoever. So be very, very careful who you learn from. I beg of you to be very, very careful, and understand that anyone who's telling you they have some sort of secret trading strategy or indicator, that if you just use that and that's the one thing that's the one thing in between you and being massively net profitable, they're so full of shit. I'm going to tell you the big secret. Even if this is the first and the last time you ever listen to me, whether you are doing short-term scalp trading all the way to long-term investing, The best traders in the world have one major thing in common. They're very good at risk management. The best traders are not really traders. They're the best risk managers. So as soon as you can find it in your own brain to somehow have the discipline to stick to the risk management you should be sticking to, like we all kind of know when you're doing it and when you're not doing it, that's exactly what you need to do to be profitable. So with that being said, that's the big secret. Obviously, if you want to trade with me, GoonieTrading.com. But basically, a lot of the content and the discussion in there is just a very, very, I guess, more in-depth way to tell everyone you have to really control your risk. That's it. What's your opinion on the order flow stuff? Yeah, it's just VWAP. Yeah, I mean, it's as VWAP is an important level. So my goal as a trader is to identify the important levels, because at those important levels, even though I have a 50-50 shot of being right or wrong, that's where you can get into a position and have a very asymmetric reward versus risk. So I know all those fucking dipshits in the world of ICT, they don't think order flow is useful because their cult leader told them that it's not useful. But all of the people who've done mathematical studies of intraday trading would actually beg to differ that, yeah, there commonly is reactions at session VWAP and at anchored VWAP. VWAP, for those of you who don't know, is volume weighted average price, and it's one of the many tools in the world of order flow analysis. But as you can see right here, we just traded all the way, where is it? We just traded down to VWAP. Right there. So, I mean, I don't know what to tell you. Not only anecdotally could you just see a reaction right there at 350, boom, we bounced 20 points. All of the stats, like I know I'm going to be the first person to tell you that it is not good math to just look at one anecdotal piece of evidence. That's just not good statistics. But obviously putting that together with the fact that you could easily backtest and say, okay, does the market commonly react to VWAP? The answer is going to be yeah. And then, so I guess to directly answer your question, my thoughts on it. Yeah, my thoughts on it are that it's clearly statistically significant and it's not an opinion. Like I find we're in this weird thing where people think opinion runs the market. And I know opinion does, as an opinion of did you buy or did you sell? But this idea of just like, no, I don't think it reacts, or yes, I do think it reacts. Just backtest it. Like it's just pure data. Like it's not that crazy of a thing. Like we can statistically find out how often when you're trading down, if you buy at VWAP, is that net profitable or not? If you're trading up and you want to go short at VWAP, is that net profitable or not? Is session VWAP more impactful than anchored VWAP? Like those are all questions that the answer is very objective. It is not subjective. And what I find particularly infuriating or irksome is that in the world of retail, I guess, influencing guru bullshit, a lot of it is stated as if it's just like kind of opinionated, like, well, I don't think it works. It's like, what the fuck do you mean? You know, that's as stupid as saying, well, I think the sun is cold. And then someone else is saying, yeah, but we can measure it. The sun is hot. And they're like, I don't think it's hot. The other day it was sunny and it wasn't hot out. What do you have to say about that? It's like, well, fucking what? And then it just reminds me that the state of the public education system is unfortunately very, very sad. And remember, folks, talking about stats, half of the people you run into are dumber than average. That's what an average is going to be, folks. So I think since we're here talking about basic mathematics, you might be thinking, Matt, what you're saying sounds reasonable. Hang on, what email? Nope, that doesn't matter. You might be thinking, but Matt, that's reasonable. That sounds good. Why do so many people mess it up? Because literally half of people are dumber than average. So if you think the average person is dumb, and that's average, half of the people in this world are dumber than that. So that's, I guess, my best explanation of why so many people are fucking up the most basic concepts ever, is because half of people do not have the either emotional fortitude or the intellectual capability to understand statements like, in my opinion, VWAP doesn't work. In my opinion, this doesn't work. It's not opinion. We have empirical evidence. It either does or does not work. But I don't think many people within the trading space are ready to hear discussions such as that. Matt, how do the odds of a gap fill being played in the day? Wait. Hey, Matt, do you have the odds on a gap being filled the day it is made and the day after? Yeah, it increases quite a bit when you do a 2-day. So I don't have it off the top of my head. That is somewhere in the Discord, but I think it increases from like 80 to 88%. So if it's not filled, the chance of it getting filled on the first day is 80%. And if it's not, the chance of it being filled within the first 2 days, it does jump higher. Wait, hang on. I saw someone, midwit is a compliment these days. That's actually really funny. Where do you do back tests? So historically, I did a lot. My background's in computer science, so I just did my own Python testing. And then with the advent of AI, I was using an AI model called Julius, and that was a couple years ago. But now Claude and ChatGPT are so good that I'm just going to do it with that. So historically, I did my own code testing, and my I know how to write code, and my background was in computer science, and I was also getting a master's in statistics before my content career took off and COVID hit, so I just never returned to the program. But this is kind of what I'm formally trained in. This is what I did professionally. My goal before Rona hit was actually to be a quant at Citadel. So when people talk about market makers and the evil people on Wall Street who are trading the spread and taking money from us in dark pools, folks, that's what I wanted to do. Fuck yeah, that's what I wanted to do. I will so easily sell my fucking morals to work at a professional firm and take money from retail. Fuck everyone else. I am in this game to put money in my pocket. Wherever I can find an edge trading, I'm gonna find a fucking edge trading. So that's what I wanted to do. And then it just turned out that my content career took off, and I said some pretty horrendous shit about Citadel, and I'll probably never be able to work on Wall Street. So alas, I am stuck here with you jabronis, and I'm gonna have to bring you guys to the next level because I have effectively blackballed myself from the entire professional industry. That's what happens when you're one of the biggest, well, in 2021, I was the biggest finance streamer, and now I'm sitting in the top 5. But when you're a larger finance streamer and you've happened to say some pretty fucking heinous shit about the entire professional establishment, it doesn't make you that many friends. It doesn't, I'm probably not. Honestly, I've said some stuff that's so bad, I don't even know if I'm allowed back in corporate America, no less Wall Street. Whoa, what in tarnation? What do you have to say? She worked at Citadel. Did you guys know that about Piper? She's a Citadel quant. So, yeah, I mean, you could either believe me if you want. You could obviously fact check everything that I am saying. Or if you want, you could just go spend $6,500 on a trendline course, or you can waste thousands of hours of your life and thousands of your dollars of your hard-earned, income, and just believe dumb shit like fair value gaps and inverted fair value gaps. I don't know. The choice is yours. I'm not your mom. I don't really care. I'm in this for me to make money. I'm in it for the members of the Goonie community to learn more about building out their own trading strategies. Once again, if you want to trade with me, if you want to get mentored by me, this is for you. If you are joining this service thinking that it's just a single service where you do exactly what I do, you're going to fail. You're going to end up losing money. I promise you that. You should join this. I share my trades to be transparent. But you should join this thinking, no, I want to learn from a guy who attacks the market and in a mathematical, statistical manner rather than just vibe trades with fucking trend lines and shit. So I just want to set that straight before you guys sign up. Right now, the options market, this little pop here did get hit 10 a.m. All right, so maybe we're going to see a 10 a.m. reversal. I was going to play it, but now I'm not. I was hoping we would be at VWAP at 10 a.m. because then I could use the recent swing low as my risk. But unfortunately, we broke below VWAP. All the EMAs are now vomiting, and we have Jerome Powell, the chairman of the Fed, speaking in about 30 minutes. speaking in about 30 minutes. I have no live position. Well, I have some options positions, and of course I have my long-term account. But in terms of active day trades, I am not in anything at the moment. If you're just joining in right now, I'm not trading on my FFN accounts because I'm awaiting a $10,000 payout, and I'm not trading on my Lucid accounts because I found out on Friday that they are moving me to live. Basically, they're saying I took too much money from them. In the month of March from Lucid alone, I was able to get $51,000. Yes, 51,000. And all those trades I streamed to you guys live. I broke those trades down every single day in the Discord, and day in and day out, it's pretty much the same boring shit over and over again. It's a game of, for me at least, of just keeping my discipline straight and doing exactly what I need to do and not sizing up and like literally just quote unquote trusting the process. And that's exactly how in the month of March from Lucid alone, I made 51,000. And by the time you count these other ones, there might be a way for me to get about to 100,000 in the month of March. And I know some of you are going to ask my total expenses. I don't know off the top of my head. Lucid, none. Legends, maybe 2K. FFN, none. No, that's a lie. Maybe 1K. Tradeify, maybe 5. I can make a video. I'm more than happy to do a full-fledged breakdown. If I had to, I'm just guessing here, maybe my total expenses are around 20,000. 20,000 for $100,000 in potential payouts. Like, I like that. That's a 5x return on investment. I'll do that every single month. I know that can sound jarring, but remember, you don't start like this. You start smaller. You start saying, okay, I spent 2K and I got a return of 10. That net 8, you roll forward. This, I'm playing at the size I am because I just rolled it forward for so long, like time and time and time again. I would never, ever recommend anyone start at this level, like just saying, hey, I got to buy all these accounts. I saw a guy on the internet buying all these accounts. No, start with a paper trading account. Don't start spending any money. It's crazy that people want to start trading before they know how to trade. And they're like, yeah, I'm just going to risk it. And then after practicing on your paper trading account, just go to one account. All you need is one sim to fund it. Prove it to yourself that you could get payouts and then take the money from the payouts to go get more accounts. You want to roll it forward. You don't want to just be like, hey, I'm out of the gate and I'm going to spend 20K. No, like, I can now, I'm fortunately in this position where I can spend 20, 30, 40K in a month because in the previous month, I'm getting 100K, I'm getting 200K, I'm waiting on $1 million payout from Apex. It's a game of rolling it forward. That's how you should think about it. And I know a lot of people like me. Do I have affiliate codes? Yes. And they want you to buy these accounts, buy and buy and buy. And please use my code. Please use my code. When you guys buy an account with my code, it means the world to me. But I don't think anyone should ever feel pressured. I will happily tell you, if you are not figuring out what your actual trading system is, I beg of you, do not buy anything. Don't do it. And I know that's like, I guess the worst marketing technique ever, but that's just the realistic way to approach this. So as much as I appreciate you guys using my code, whether you're buying this account, that account, any of that stuff, the market's always going to be here. You don't have to rush it. You don't have, like, I know we all feel that pressure of like, yo, I see other people making money. The market's doing crazy shit. I need to make money right now. But remember, especially if you're new, I mean, it's hard enough for professional traders right now. So like, think about how difficult that is for new traders, that sometimes you just have to understand where you are in the process, where you are in the learning curve. It's okay to trade no real money, no real risk, and figure out what you need to figure out. You should never feel pressure to be like, yo, I saw this dude and he's saying I gotta buy these accounts now. Come on. Damn, so we will get 1 million a month content soon. I'm hoping, dude. I am patiently waiting for Apex. I am being told that they're reviewing my accounts. They're going through all of my trades. They're going through AML. They're going through KYC. I'm just waiting. It's a game of patience. And honestly, I think I would be a little bit more stir crazy waiting on Apex if I didn't have all these other accounts to trade. But like, I do. So February was a bit of a weird month for me because it was at the start of February that I put in the request on Apex. And then from there, I was like, okay, what do I do? And I thought it was going to be a little bit earlier. Obviously, it wasn't. So then at the midway through February, start of March, I was like, cool, let's start taking all these other firms very seriously. And that's how just from Lucid alone, not only did I get $51,000 in payouts, but literally in my first month, they're saying, hey, congrats. And they moved me to live. So I'm literally just like, look at paused. So I was able to run the accounts up pretty well, 165, 164, 4 and 4. So all 5 of my accounts are officially paused as they are moving me to live. And it took, 5 weeks? So $51,000 in payouts. And we're now going to live, I guess. Yeah, they need to hurry up and give you your money. I mean, I wish I already had the money. It'd be crazy for me to not say that, but I also understand from a business perspective why it takes so long, especially in the middle of them figuring out all that drama from all those other influencers who were scamming the system and were lying. So obviously they're going to be a little hesitant when it comes to a person with a following getting such a large payout. So I kind of get that. And also I think I just kind of got a little bit unlucky with the overall timing. And what I mean when I say that is, hang on, what time is it? It's 10:05. That's not a bad trade right there. This breakdown trade at 27.25, running back up to VWAP. It fails. It snaps this trend line. So we're putting together trend lines. We're putting together VWAP. We're putting together momentum. We're putting together not only order flow, but we're also looking at options flow. That was a pretty good trade. Obviously, I'm a little late to it. I wish I took the breakdown. Icarus did fire short there. I just don't feel like taking the trade. Obviously, I'd be off by 20 points. And in my trading, just to be, I suppose, self-critical, I find that my entries could use a little bit of improvement. I think Matt, as of last week, would have already been chasing that. And maybe it works and it keeps going. Or maybe I should have been like, no, I want to be within a couple of points of the appropriate entry, because obviously that's a way to minimize your overall risk. And yeah, 320 right here is the point of control. If it bounced up, if it got into the 20s, I was going to take that short. Icarus fired. It's with momentum. When I say it's with momentum, we don't have to do any big brain stuff. 5 minute went bearish, 10 minute went bearish, 30 minute. And technically, you have to wait for this bar to close. But obviously, it's also below the cloud, and the 4 hour is also bearish here. Looking at the NASDAQ, 5 minutes bearish, 10 minutes bearish, 30 minutes, same thing. It's on the bearish side. We haven't taken out the previous low. This bar hasn't closed yet. So, like, if you want to be like super, like specific about it, like almost like robotic, technically we'd be waiting another 22 minutes. But obviously, the other stuff is aligning. The Mag 7, I'm kind of actually happy I didn't chase it because I thought the Mag 7 was continuing down. I didn't realize it had such a strong bounce back here. SPY as well. Okay, so see how we have some conflicting information? This is why you want to check various things. You don't want to just like live by the sword, die by the sword by one concept. I'm a big fan of putting things together. So even though we saw momentum and obviously 5 and 10 are bearish, 30 minutes questionable. Same thing on the NASDAQ. Okay, interesting things to point out. Looking at order flow, okay, we're below VWAP. That might make you bearish, but I just saw this higher low. What if it quickly recovers? Okay, a thing to think about. But what's really like contradictory here is flow. SPY at 9:58. Like, remember how we always talk about those 10 a.m. reversals? Do they happen every day? God, no. But they happen enough that it's worthwhile to pay attention to. And as a person who likes statistics, I actually wish I had the odds. Over the past month or two, it seems like 3 out of 5 trading days do have a clear reversal at 10 a.m. And when I say at 10 a.m., I mean anywhere from like 9:55 to 10:15. But look at that huge pop. And even this, the Mag 7. So they might be trying to put in this low here. What did we bounce off of? Yeah, we're even at the spot gam implied one-day move low already here at 380. So maybe just... Wait, where did all my stuff go? Where did all my important lines go? All my key levels. Okay, I guess we're doing this without key levels. Obviously, I know there's a key level at 400, so we're going to be watching that bad mamma jamma. We're going to be watching that bad mamma jamma. But this might be the first higher low of the day. they're trying to turn it around. Now, will they be successful? I don't know, but this is pretty evident. Lower highs, lower lows. They run it right to a key level. This time around, it happens to be the closing value from Friday. And then boom, we just had the first higher low. Now, will this lead to anything? I think it could reasonably lead to a test of 400. But once again, not only am I a 50-50 trader, but whenever we come to these levels, I assume you have a 50-50 shot. 50-50 shot of just like, okay, when you get there, that's the game of identifying key levels of like, okay, when you're at a key level, pay attention to who wins it. Do the bulls win it and we keep going, or do the bears win it and we get rejected? So not only could you say that about 6,400 right here, see, clearly we went down, we retested. This breakdown at 946 was a phenomenal trade. It just was. You snapped the key level, you could take that short, your risk is minimal, and you get to ride it down. Now, obviously, you still might be in it and you want to like wave the red flag, or in this case, the green flag, because you're going to be profitable of like, okay, probably this breakout, you might want to take your profits because it might be reversing. You just don't know what the next bar is going to be. So as much as I can intentionally say that about 6,400, circling back to the order flow question, yeah, I consider watching VWAP to be an important thing too. It's just another key level. In this particular case, it's considered a point of equilibrium. So if you can get in at equilibrium and then it breaks in your way, that's a nice asymmetric turn. And if you're wrong, ideally you get out very, very quickly and you're able to move on with your life. So I don't think we need to overcomplicate it. I think the complicated part of active trading has a lot more to do with your own psychology. A lot more to be like, okay, I know what to do. How can I get myself to do that day in and day out? But the actual tactical things of like, what is good trading? It's not hard to understand. It's get in with minimal risk. And when you're right, ride it as long as you can. That's one of many things that can work. Of course, there are negative risk to reward traders where they're like, hey, I'm right 95% of the time. I just do little scalps. That can work too, but make sure you have the psychology for it. There's neutral risk to reward traders, as in they go 1-to-1 and they're just hoping to have a hit rate higher than 50%. That's another thing that mathematically it can work. I'm not saying one's better than the other. I'm just saying make sure you're using one that you're comfortable with. You fully understand, it fits your personality, it fits your account size. Those are all pretty important things. All pretty important things.
Order filled. Order submitted.
So here, what am I doing? What in shit? That's the wrong account, folks. I'm only trading on one account for some silly reason. What is happening? Why is it on the wrong account?
Order submitted. Order
there
filled.
We go. All right. Okay. Now we're trading where we should be. Okay. So what did I do? Just to explain this, like generally this is something we get a little bit more in depth to in the Discord, but just to kind of explain it, just because we're having a really good conversation about stats and being 50-50, folks, my confidence in this being right, as in we go up from here, is literally 50-50. Like I give myself a coin flip of did I pick the right direction? What's interesting and why this could work is because if I'm half right time and wrong half of the time, if I'm wrong, I'm taking this hit. And honestly, I could probably even move my risk up to closer to like 28. But since we're here monitoring it, I can do that manually. But if I'm wrong, I take this size of a hit. If I'm right, I get to ride it all the way back up. This is what I say when I'm asymmetric. So if half the time I'm getting this reward and half of the time I'm getting this hit to my account, that's going to be a net profitable thing. That's how I'm going to win this. And what I really like to do too, I like this better for my own psychology, is when we start to get to key levels, such as, right, in this case, 390, because that's going to be the anchored VWAP. When we hit that, I'm just going to get my stop to break even. And those are my favorite trades because then I just don't give a shit. It's just a break-even trade. And hey, if a lot of the times my break-even trades do get knocked out for break-even, but remember, you can literally take an infinite amount of break-even trades and you're still going to have your account. And then every so often, even if it's 1% of the time, if it runs in your favor, well, then you have a monster gain and you were able to do that with no risk. Like if you get your stop to break even, you are literally taking on no risk. So you could just do that time and time and time again. And even if you're knocked out, that sucks. Like, I'm not saying it's necessarily the easiest on your psychology, but every so often, if you catch that runner, like I did on Thursday of last week, it can really, really run in your favor. Break even is king. I like to think that I'm the king of break even. I love it. I know that a lot of gurus and furus say you're not supposed to do it. And my first question for them would be, show me the fucking math. But yeah, as we're getting close here, boom, free trade. Folks, no matter what, I guaranteed myself my profit on the day. And why did it not give me the audio? Are they all break even? No. What the fuck?
Order canceled.
Okay, I think it was just, well, here, let me make sure I'm right. I just want to make sure I don't have accident rogue orders.
Order canceled.
All right, 301. 301 is the lead account. Okay, cool. Free trade.
Order submitted.
Boom. All right, everything's where it should be. But think about this. Was this a best entry? No. It was a little bit of a fuck up. I should have been in below 50. Specifically, I should have tried to be in below 48.72. That is below VWAP. So even if we touch VWAP, there's a chance that I'm protected. So it's not the best entry. It's a little bit late to the game, but whatever. That's a bit of a bummer. Yes. Is there a high chance that we dip and knock me out, or maybe run into VWAP and knock me out? Yeah, it could happen. And in fact, the odds are pretty decently high that, it's going to probably be happening in real time. But just on the off chance that it never revisits it and it actually just gets going, cool, I get to ride it. It is no sweat off my back. Obviously, you could look at it and be like, but Matt, it was higher. Why didn't you take that? Well, what if it just keeps going? I don't know what the next bar is going to be. And here, it could fail at VWAP. But see right there, it didn't hurt me at all. I was able to go fishing for free. So if it went and I caught the white whale, great, that's awesome. It's a huge return for me. And then the worst case scenario was literally nothing. The next bar could be a giant red bar and I could be blowing out these accounts. Okay. Don't want to do that. And inherently on the flip side, it could have gone in my favor and it could have been a giant return. I think there's too many people right here. Boom. Am I happy I got out? Of course I am, because I would be giving back a good chunk of my gains already. And I just don't think people are teaching about trading that way, where it's almost taught in a way that you have to be right all of the time, always making money, where I just deeply disagree. I deeply, deeply disagree. That was a nice trade. I'm going to give it a second. Fuck, this one might go without me. This is why if I had a better engine, I probably would have gotten knocked out anyway. I don't really know. I don't see a setup where I probably wouldn't have been knocked out. Hey, Matt, if you have a runner in the money and it's still running late in the trading session, should you let it expire? For options? It depends. What's your trading plan? I mean, that's like far too general of a circumstance for me to possibly say there's like an appropriate answer for all circumstances. The best thing I could say is stick to your trading plan. But if you're talking about futures don't expire every day. That's not how futures. So I don't even know what product you're trading. But if you're trading futures, that's not how futures works. Futures are contracts that have to roll, and depending on the contract you're trading, it depends when it rolls. But if you are trading indices like NASDAQ, like me, it rolls every quarter. It's not like it expires every day. And it's those types of things that I highly recommend you do paper trading, not real money, like not real risk, just to figure out those mechanics. Yeah, I don't think there was a way for me to avoid getting stomped out for break even on this one. Not yet, at least. Not yet. Yeah, it got pretty swiftly rejected right at the 1 minute. Yes, for options. Once again, there's no specific, like, general statement that is always appropriate. Just the biggest, like, without knowing your strategy or anything, of course, if I knew more of the details, I'd be able to like say, hey, like mathematically this is optimal, but I don't. So I would say backtest your strategy and find out, do you have more of a net return from letting it expire or not? Hey, Matt, how do you approach your buffer and risk on a daily basis? Yeah, by not hitting it. pretty much every single day. I'm like, okay, can't hit this number because I'd be blowing out accounts. Like it's your risk, your buffer. It's a non-negotiable. Like whatever it is, you got to get out at that level. You can't just be adding and giving it more distance because that's how you lose accounts. That's how you lose your money. I wish I had some sort of like very philosophical answer to you, but it's actually rather simple. Don't fucking hit it. Because your accounts are evals or funded. I only have 2 evals right here. Actually, oddly enough, the 2 with bigger gains are evals. Everything else you see on the screen is funded. These take profits, they're take profit pros. I could on 3 of them, I could take out $10,000. I could take out $30,000 from take profit today. These 3, they're funded at Legends. These 5 are funded at Lucid. These 5 are funded at Tradeify, and these 5 are funded at FFN. They're all funded accounts, as in working for real payouts, except for these 2 right here. The LT ATA, they're brand new evals today on Legends. But other than that, they're all funded. People are saying there's weird stuff going on with the YouTube stream. Yeah, I see that as well because on one of them, it says my concurrent viewership is 176, but then also on another service, once again, YouTube, it's saying 1,400. So something is happening, but I guess, yeah, if you're a bot in chat, say hi very quickly, just so all the naysayers can know. So please, could all of the bots, like real Slim Shady, could you please stand up? Could all bots please stand up? Once again, bots, not people. If you're a real human, if you're a meat-based life form, we're not asking you. We're asking the clankers in here, the wirebacks, the wirebacks in chat. Oh, here we go. Beep boop. Fuck, dude, these bots, man. What am I gonna do? Oh, the clankers are taking over. The clankers are taking over. All right, let's see what we have here. Remember, there's maybe a little bit of choppiness in the market today. Powell's speech is in 9 minutes. 9 minutes. Let's see. All right, shout out to the best producer in the world giving me this information, starting somewhat soon. All right, I'll jack up the volume just so we don't miss anything over here, but starts in about 8 minutes. So he's timely out of all of this stuff. He's the one who's the most timely in this particular world. So it should be starting right at 10:30. As we're getting closer, the Mag 7 is recovering, which is why I'm interested in a recapture of VWAP because it's with trend on the options flow. The NASDAQ is slowly grinding up. It doesn't look as nice as the Mag 7. The S&P 500 was going up, gave some back, but now it's pretty much just net neutral. Like I said, if you want to trade with me, if you want to be mentored by me, if you just want to trade with a cool group of people, GoonieTrading.com. Of course, if you have any questions, comments, or concerns, just go to GoonieTrading.com, come to the contact page, and this will directly come to me. If you want to trade with Lucid, they're running a pretty sick deal right now, 40% off with code Goonie, pinned to the top of chat in the description of the video. My favorite is the 150K Flex account, but once again, that's just my personal opinion. I do recommend you use whatever is most appropriate for you. Oh, do I want to get involved in this? Do I want to get involved in this? I'm torn. I'm torn. He's about to talk. Matt, what are your thoughts on VCX ticker, that the average retail player does not have the resources to trade it appropriately? A lot of crazy stuff going on with that. For most retail traders, that is a ticker to 100% avoid. I'm not saying be bullish. I'm not saying being bearish. I'm saying like literally just avoid. Like it is, you have to trade where you have an edge, and the VCX craziness is not where really I'm not saying like maybe you're exceptional and that's fine, and maybe you bought all the data packages that you need to properly do an analysis on it, but most retail traders are not in this situation to be trading VCX with an edge. You could trade it, and if you do, I hope you get lucky. I'm not rooting against you by any means, but my opinion is that most retail traders should not be messing around with it. All right, oil's actually coming down a little bit, but we're not seeing a reprieve. We are not seeing a reprieve in the world of equities, at least not yet. But we are right at equilibrium. We are pinned basically right to VWAP. Very quickly, if you guys don't mind, I saw something cool that I just thought I wanted to share with you. So good time before Powell starts talking. Logan Paul sold a Pokemon card for more than $16 million. And obviously, when you're talking about numbers that big, it gets a lot of people to start paying attention. The rarest Pokemon cards are yielding massive returns that are even bigger than the S&P 500. Yes, you heard that right. Pokemon card investing is outpacing the S&P 500, the overall stock market. During key periods like the Rona boom and other surge in 2025, trading card indices tracking Pokemon sales posted gains that have far exceeded the S&P 500 long-term average annual return of 10% to 12%. A rare Pikachu Illustrator card owned by influencer and wrestler Logan Paul sold for more than $16 million last month in February, which set a record for the most expensive trading card ever sold at auction. $16 million. Absolutely crazy. Absolutely crazy. The fact that they're going for that much money, the index is right here. Here's your Pokemon card index, almost a 50% return year to date, while the stock market is in the red. The fact that your money was safer in the Pokemon world than it was in the world of equities, quite telling if you ask me. Quite telling if you ask me. Here it is. That right there is worth about 16 mil. Yeah, I read that the grading on that card was a little suspect, but overall, still a pretty impressive story. Still a pretty crazy story. All right, just wanted to share that. Now Logan can pay others for the NFT thing. No, he's never going to pay that one back. He's never going to pay that one back. Come on. Let's be realistic here. You think Logan Paul's going to pay back the crypto zoo thing? No way, Jose. No way, Jose. Hey, Matt, when will you start looking at adding in your long-term portfolio? Roughly now. I mean, it's news-based. It's not level-based. It's news-based. Like, as soon as we get, like, clear indications that this whole shit's going to be over soon, that's when I am. But we're seemingly near it, like now in real time. I have my list of high-quality blue-chip tech stocks that I want to be adding to my portfolio. So I'm ready. The cash is there. I'm just kind of, I'm not going to do it all at once. Well, I would if Trump's like, guess what? We're pulling out. But just as it gets a little cheaper and cheaper, I'm just adding and adding and adding. But the long-term investing is really not that complicated. Find high quality blue chip stocks and add on dips. You don't have to overcomplicate it. Why do you trade through multiple funded brokers instead of one? Is it a matter of reaching max limit, or is there another reason? Well, it's because if you're trading well on one account, you by how many ever more accounts you have, you can make that much more money. I get that question commonly, and like to me, it's such a no duh thing. If you trade on a account and make $1,000 and you're confident you could do that commonly, why would you not then trade on 5 or 10 or 15 or 30? Because all of a sudden, to make 1,000, you could do the exact same thing and make, in obviously the most like that latter case, 30,000. I guess like not to be like facetious, but like because of basic math. It's just like if you're confident in your trading, You can make more money by adding more leverage. I like it. I don't know. I wish I had a better explanation, but duh. He's speaking at Harvard. I think the better question is why not size up the bets? Because of the drawdown. What's the link for the live? If you just search Jerome Powell live, Fed Chair speaks at Harvard. It's right now being posted by the Associated Press. Matt, do you not regret going to Harvard? I didn't even apply to Harvard, so no regret there. But coming back to the math of why not just size it up, because that's a misunderstanding of math. If you size it up, you're closer to hitting your buffer, your DLL, and blowing out, where you can double up on your exposure, but then like with multiple accounts. So if you're right, get double the exposure, but then you're not that close. You're not doubling the chances of you blowing out. The screen says he's speaking at 10:30 a.m. EST, which that's in an hour. No, it's not. Learn how to tell time. It is 10:30 a.m. ET right now. Little double bottom right here at 315, right back to VWAP. So we just keep ping-ponging right back to equilibrium. So just kind of waiting for this to break in one way or the other. The prestigious institution where Jeff Epstein had an office over a decade and made friends with all the professors. Yeah, that's the same place. UTXO. Do you not know how to tell time? Oh, because you don't know about daylight saving time? You don't know where in the year we are? What a dumbass. You know, it's 10:30 a.m. ET, brother. Feel free to ask chat to fact check it, but it's 10:30. If you live on the East Coast of the United States, it is in fact 10:30 a.m. I think he's asking why you get your accounts from 4 different brokers instead of all the accounts. Oh, because some of them limit you on how many you can do. So like on Lucid, you can only have 5 funded accounts. On Funded Futures Network, you can only have 5. On Apex, you can go up to 20. On Take Profit, you can only have 5. Like, I would stick with the one firm that I perceive to be the best if I had unlimited. But unfortunately, they do cap you. Like I said, Apex is 20. That's why I was trading with their 20. I was happy with 20, and then they froze my accounts as I'm waiting the $1 million payout. So then I had to go and get 20 elsewhere. As I was working on getting 20 elsewhere, I realized, hey, some of these I actually kind of like the rules, so why not do more than 20? So I'm maxed out on Take Profit. I am not maxed out on Legends yet because I need to pass 2 of these. But I am maxed out on Lucid, I'm maxed out on Tradeify, and I'm maxed out on FFN. So, no, their rules are what's limiting me. I would definitely do more at this point. But, hey. What firm do you think is best if you got to choose? Well, there's evident ones that are just like bullshit and no one should ever use, but then there are a tier of ones that are good and reliable, and then that's specific to the trader because we all trade differently. Matt, are you happy? No, I am stressed generally in life. I guess I'm not happy, but I am a ball of stress these days. But anyway, there are basically all of these firms on the screen right now, plus Apex, are the ones that I trust and I think are reasonable to use. And then from there, if you're only trying to buy one account, you should take 30 minutes of your time to read the specific rules and pick the firm that is best for you and your trading style. So there's many firms I don't touch, I don't use, I don't trust. If they're on the screen here, FFN, Tradeify, Lucid, Legends, Take Profit, plus Apex.
Of the Board of Governors
I trust all those.
of the Federal Reserve System, Jerome Powell.
J. Powell. How many contracts do you trade on your Take Profit? I generally trade one at a time.
The pinnacle of economic policy was not paved with mathematical modeling in an economics doctoral program, but rather with a deep study of institutions and laws. Raised in Washington, D.C., he attended Princeton University, where he earned a Bachelor of Arts in Politics in 1975. He then attended Georgetown University Law Center. While earning his law degree,
what is this Zoom call that they're on?
He also served as editor-in-chief of the Georgetown Law Journal, one of the world's most influential and prestigious legal publications. He then started a career of extraordinary impact and breadth. He distinguished himself first in the private sector,
popping.
working
Tough to
in
fade
investment
this.
banking and private
S&P
equity,
500's flat.
notably as a partner at the Carlyle
Nasdaq is
Group,
trying to
while
climb up.
repeatedly answering the call for public service. He served with distinction as Assistant Secretary and then Undersecretary of the Treasury under President George H.W. Bush. In 2012, he returned to public service as a member of the Federal Reserve Board of Governors. His nomination to serve as chair in 2018 by President Donald Trump, and then his renomination to serve as chair by President Joe Biden in 2021, stand as testaments to his bipartisanship.
And the market's turning. S&P just took a hit right there.
Economic stewardship.
We're going to the intraday low.
Grounded in empirical evidence,
we're pretty much there
institutional humility,
on the cues.
Collaboration, and public service.
Bitcoin's taking a hit.
Like the greatest Fed chairs in our history, Paul Volcker, Ben Bernanke, Chair Powell advances the interests of our nation and not his own, sometimes at great personal cost. We are immensely privileged to have him share his insights today. Please join me in warmly welcoming the chair of the Board of Governors
we just
of the
made
Federal
a fresh
Reserve
low.
System,
We broke
Jerome
the
Powell.
IB low on the Nasdaq, not on the Qs.
Thanks very much.
Fake out?
So I'd like to start at the beginning of your career. You studied politics and then law, and then eventually pivoted from that to public service. Were you thinking about public service and economic policy making at the start, or did all of that come as a surprise later? And how did you decide to make the pivot when you were in the middle of your career?
Let me start by saying, David, thank you so much for having me, and thank you to all of you for being here today. It's great to be here. I've been looking forward to this. Yeah, so I took macro and micro my freshman year, and it wasn't as interesting to me at that age than some other things, so I wound up majoring in politics, actually specializing in Africa. It's fair to say that my freshman major was acoustic guitar. My parents gave me a Martin D35 for high school graduation. They must have regretted that because that's what I was really working on mostly. But I did finally figure out what I wanted to do. And when I graduated from college, I really had no plan, but I did have one thought, and that is to have a career in the private sector, but also to do public service intermittently. And I was thinking about people like George Shultz, who was famous at many economic jobs, and others who had done those sorts of things. And I grew up in Washington, D.C. My parents were not, my dad had fought in World War II, and he had been a U.S. attorney, but they weren't people who were terribly plugged in politically. I was very interested, though, in those years in public policy and in trying to create a life that was partly private sector and partly public sector, and amazingly enough, that's kind of what happened.
Great. So now, jumping right to the present, we talk about the Fed as a unitary
Mag
entity.
7 is
but of
still
course,
picking up, folks.
The Fed is led by the Federal Open Market Committee. There are 12 voting members. You, despite being chair, only have 1 vote. And in normal times, there's a lot of consensus. Everyone's in agreement. Lately, there's been some disagreement. There's been votes to keep interest rates the same, but some members of the FOMC have decided instead to vote to decrease interest rates. How does the disagreement on the FOMC make your job harder as you describe the path of economic policy going forward?
You know, I don't think of it as making my job harder. I think it's, and I've found throughout my career that when you have a really difficult problem, it helps to hear from all sides. And in a way, for example, when I was a private equity investor and I was looking at supporting a transaction that I wanted to do, I really wanted to hear from the smartest people. Tell me why it's a bad deal. Tell me now before we do it. And I just think you don't really know how much you believe in something until you've had somebody really try to take it apart. So I welcome that at the FOMC and at the Fed generally. And I think it helps us make better decisions. The Fed has had a tradition of governors not dissenting, but that's really not typical of other major central banks where there's more dissenting, or I mean, they're different, depends on the central bank. And to me, what matters is a dissent thoughtful? Is it helpful? Does it help? Does it express a point of view? Can you stand behind it and say, yeah, that's very thoughtful? And that kind of a thing is not bad. And it doesn't hurt with communications. You know, I think a situation like the present situation where, you know, there's sort of downside risk to the labor market, which suggests keep rates low, but there's upside risk to inflation, which suggests maybe don't keep rates low. You've got tension between the two objectives. And I think to try to expect unanimity at a time like that, where it's really quite historically challenging, it would almost be misleading to be really confident in which way that should go. In fact, it's been said that confidence is what you feel before you really understand the problem.
Okay. Let's turn to the Fed's balance sheet. In 2008, 2009, that great financial crisis, there was a massive expansion in the Fed's balance sheet. And then again in 2020, under your leadership, there was a second vast expansion in the Fed's balance sheet to address these two economic and financial crises. The balance sheet has since come down a bit, but it still sits at over $6 trillion. So I'd like to hear your views on how efficacious this vast bond buying program has been, both in the 2008 and then again in the 2020 episode, and also hear your reaction to the critics who say that the Fed has become too big a player in the bond market. The Fed has become too influential. There's been a muddying of, as according to the critics, of monetary policy and fiscal policy. Do they have a point, or are they wrong?
So I think the place to start with that is the problem that people were struggling with from about 2008 to 2022, let's say, in central banking everywhere in the world is once you've cut interest rates to zero, do you have anything else you can do? Let's say you cut interest rates to zero and the economy is still clearly not flourishing and it wants more support. So do you just say, well, we're done, we're out of ideas here? And there were two ideas that were followed in the global financial crisis, one of which was to buy assets, longer-term assets, and what you're doing there is you're buying longer-term government-guaranteed securities, which would hold down longer-term rates, and that should stimulate the economy. Or also forward guidance, which would tend to hold down forward rates as well, or just rates generally. So we did those two things rather than do nothing. And I think in the first instance, they were both efforts were successful at restoring market function and at restoring financial stability. At the beginning of the global financial crisis and the pandemic, we had massive problems of market function. They were solved. I think the question, getting to your question, David, of the macroeconomic effects is a much less certain question. I don't think there is an accepted answer, but I would just say there's an oceanic quantity of research on this, and overall it tends to find that buying long-term assets does lower interest rates and does provide some support for economic activity. And I guess I'd be in the camp of thinking that there's something in that, but it's hard to quantify it. And I think, you know, different people have different views on how much those effects could be. The other side of it is, you know, QE is thought by the critics to risk all kinds of other things. So, for example, you could buy too much of the Treasury market and it would stop functioning well. We have not seen that here. At the very beginning, there was the thought that it would be inflationary. We have not seen that, or that it would threaten financial stability or even create inequality. So we haven't really seen the downside risks. At the same time, the last thing I'll say is, I remember before I took over as chair thinking, I'll almost certainly never have to do quantitative easing. So what's that expression? Man plans and God laughs, something like that. So it just, you know, the pandemic came around and we needed to do a lot of asset purchases in a big hurry, and we did. So far, no Treasury Department has ever said, stop doing that, you're supporting the economy too much. Maybe that'll happen someday, but it hasn't happened yet.
So let's talk about the dynamics of inflation since the spike in 2022. Inflation has been coming down since then, but it still hasn't reached its 2% target. Some have argued that that last mile is extremely difficult, and to obtain that, we will need a recession. Others have argued that you've gotten us very close and you'll get us the rest of the way. Are you concerned about the time duration of the path from the high inflation of 2022 back to target? It's taken time. We're not there yet. Is that a destination we'll reach, or are you concerned that the last mile will prove very difficult?
So we will reach, the FOMC is and will continue to be committed to getting inflation back to 2% on a sustained basis. That's the place to start. So I feel like we had pretty much gotten there at the end of 2024 against the predictions of almost the entire economics profession when we raised rates a lot and very quickly in 2022. 100% essentially of economists were forecasting a recession. We didn't have one. Actually, we had 23 and 24 were both very strong years as the supply side healed and as our higher rates had some effect on inflation. So by 2024, you had the economy growing at 2.5%. You had inflation in the 2 plus a few tenths on a 12-month basis by the end of the year. And you had the employment market. You still had the labor market at essentially full employment. So I would call that a soft landing. We had it there. Then since then, we've had to face a much smaller source of inflation.
So we just peaked to a fresh low. We're getting a bounce. Now the question is this bounce worthwhile to short, or are we done going down for the day? We're tagging the low of Friday on the NASDAQ.
To inflation. But that's a much smaller
Paying
thing
close
than we saw
attention to
during
this
the
of do
pandemic
we
inflation.
fail somewhere in this zone?
You know, and of course now we're facing events in the Middle East which will certainly affect gas prices, and we feel like our policy is in a good place for us to wait and see how that turns out.
Yeah, great. So let me turn to the current crisis in the Middle East and the effect on energy prices. Indeed, this classroom is familiar with that question from the last problem set, where we asked, how would you advise the Fed to respond to the rising price of oil? And we teach that when there's a demand shock, it's a pretty natural set of recommendations that emerge for the Fed. But when there's a supply shock, like this energy price shock, there's trade-offs that the Fed has to juggle. How do you make those trade-offs in general, and how do you make those trade-offs in this particular instance? And can you help everyone with their piece?
Well, maybe they should tell me. Sure. So you start with what you said. You know, our tools work on demand. Higher rates will tend to moderate demand. Lower rates will tend to stimulate demand. And when you have a supply shock, our tool doesn't have meaningful shorter-term effects on supply. So when you have a supply shock, the first question is, do you respond to it? And the classic question has been around energy, just in general, not really speaking about the current situation, although I'll get to that, I guess. But energy shocks have tended to
We're
come
back
and
to
go pretty
VWAP,
quickly.
the volume weighted average
Monetary
price.
policy works
320 is the point of control. We exceeded that.
And
so
by the
320
time the
to
effects of a
367
tightening
is an
monetary
interesting
policy take effect.
transitional area.
The oil price shock is probably long gone, and you're weighing on the economy at a time when it's not appropriate. So the tendency is to look through any kind of a supply shock, but a critical, essential aspect of that is you have to carefully monitor inflation expectations, because you can have a series of these supply shocks, and that can lead the public generally, businesses, price setters, households, lead them to start expecting higher inflation over time. Why wouldn't they? At the end of a certain number of years, the inflation is now just higher, and that can happen. So you monitor that very, very carefully. Also, in the current situation, you have to be mindful of the whole broader context. And the broader context is we're still, we've been coming down close to 2% post-pandemic, but we've never actually, gotten right and stayed at 2%. So it's been a while. And we're very mindful of that fact. Inflation expectations do appear to be well anchored beyond the short term, but nonetheless, it's something as we will eventually maybe face the question of what to do here. We're not really facing it yet because we don't know what the economic effects will be, but we'll certainly be mindful of that broader context when we make that decision.
Great. So you've been a powerful and vigorous defender of the independence of the Fed with respect to monetary policy. You've also been collaborative with administrations with respect to financial regulation. So under President Biden, you you collaborated in a program of increasing regulation. Under President Trump, you've worked together to reduce regulation. So on the one hand, we've got an independent Fed with respect to monetary policy, and on the other hand, we have a collaborative Fed with respect to financial regulation. I don't think there's a tension there, but can you explain to us the two different approaches and how you understand them?
Yes, so start with monetary policy. I think there's pretty broad consensus in both political parties on both sides of Capitol Hill, and our oversight, by the way, is Congress, not the administration. But pretty broad agreement that on monetary policy, the Fed needs to be fully politically independent, not reactive to political things at all. We just need to do our job and stick to our knitting. Regulation is a little bit different, especially since Dodd-Frank, where the Dodd-Frank Act created something called the Vice Chair for Supervision, who has a specific statutory assignment, which is to oversee all of supervision and also set the agenda for regulation. So the Vice Chair for Supervision, if she wants to propose a change in, for example, the Basel III Accords as implemented in the United States, she has to bring that to the Board of Governors, which is the 7 governors, and vote for it. But she has full control over supervision. So as chair, the whole idea is to be non-political and not, never working for or against any political party or individual, or never even considering things like that. So I think the way the law works is the chair should allow the vice chair for supervision to carry out the role that Congress has assigned to that person by statute. And that's what that is. So you'll see, and the two parties really have a big difference on regulation now. So I like to think that the chair should always be someone who is working without regard to political, and should be therefore a person who can be reappointed by either side. That's always been the case. It's been, Ben Bernanke was reappointed, I was reappointed. And I think it's a good test of the Fed's nonpartisanship that your appeal is really bipartisan.
Order submitted.
Free trade. Attention on the casino floor. It is a free trade.
I don't want to say deference, but any chair needs to let the vice chair for supervision take the lead on those
To explain
issues,
why I did it aggressively is just in case it bounces off the IB low.
So
I don't want to go red on it.
Dodd-Frank and
maybe it vomits. I don't know. 50-50 shot. But I did it here just because this red dash line is the initial balance low. A lot of traders like to pay attention to that level. I don't want to get caught up if I'm quote unquote wrong. So once again, it just comes back to
protection. Today we look out at the
protection.
world and we see lots of threats, both inside the formal banking system that you regulate and in the non-bank financial system, which is lightly or not at all regulated. So I wanted to have your thoughts on whether we're in a position of relative safety after all the Dodd-Frank and other reforms following the 2008 financial crisis, or whether the new threats actually have brought us to another period of concern. And just to illustrate with a couple examples, inside the banking system, there's commercial real estate that has fallen in value. That affects both the banking system and non-financial
that's why you have protection, folks.
We have
just in case there's a bounce.
Credit market and a very active debate about its health.
Happens to the best of us.
Cybersecurity in the age of AI.
Yeah, this is just a key level. I saw the double there. Felt a little sketchy.
Of course, there's always a possibility, but is it
felt a little sketchy. And guess what? If it shows weakness again, I could always re-enter. That's one of the beautiful things about trading futures is there's no pattern day trading.
The global financial crisis, we actually started a new division called the Division of Financial Stability, and their job is to be, sort of the watchers of all financial stability issues all the time. So we're not. The old system was a crisis arrives, we get the team together, and we battle the crisis. This is much more of an ongoing monitoring thing with a framework that can be checked. So I would say after the global financial crisis, which happened when you all were extremely young, between Dodd-Frank and the Basel agreements, we pretty dramatically raised the amount of capital and liquidity that the largest firms and other banks have. And I think that's been a good thing. I think they're also much sort of more transparent and more aware of their risks and that kind of thing. So I think we've significantly hardened the system against the kinds of things that happened in the global financial crisis, where you had a lot of credit losses really around mortgages. And so that kind of a situation, we've got well-capitalized large banks. But that's just one part of the financial system. The capital markets, the U.S. has by far the largest capital markets sector relative to the banking sector. The other countries still have a much bigger banking sector relative to their capital markets. And, that's going to be less well regulated, and that's a good thing. You want it to be the place where biotech companies can do IPOs, and they may or may not succeed, but they can get capital out of that market. And you're taking a lot of risk, but great things happen because people put money into biotech. So we've done some hardening of that, but we shouldn't be trying to regulate risk out of existence.
Taking another stab at it.
But so I think
same thing.
We did fix
I wanted to get to IB. If it snaps, great.
Pandemic, we did address.
I'll move my stop to break even. My short's in above 300.
The financial sector.
Yes, I am being mindful of VWAP, both VWAPs. And we'll see how it goes. Maybe I want to add at those levels if I'm wrong to improve my average, but
thing coming, and so
we'll see.
I think in particular, we've had all kinds of financial crises, but we've never really had a successful cyber attack on a large financial utility, let's say, or financial institution, and that would be quite a different thing. If people are going to lose money in a certain part of the economy, we have a hugely resilient financial system now. It's more. Let me say this: it's more about resilience than it is about avoiding crises. One of our former people used to say that we're in the levee building business, not the hurricane prevention business, right? So there are going to be hurricanes, and they're going to come, and you just have to assume you won't know what direction or what the nature.
I was trying to play that breakdown. Obviously didn't work, but now we're at key levels. This is what I want to pay attention to.
We do have that, but again, nobody who's in that business will ever give you a green light. They'll always say, "Here, these are the risks, and we got to monitor." You mentioned private credit. So private credit is something, as you guys are probably following. It's a relatively small part of a very large asset pool. We're watching it super carefully, as everyone is. We're talking to the people in the industry and investors and everything. I think we understand it. We're monitoring it. We're looking for things that might lead to greater contagion or greater losses or connections to the banking system.
I might not add here. I might just
we're going to do that. You're not going to hear
seeing the SPY options pop
here because that's a jinx.
SPY just made a fresh high. The Qs have some distance.
We're following very carefully.
We'll see.
What is one of your biggest regrets in your time as
we
Fed
just
chair?
ripped through one VWAP, got to the other.
What is something that you're very proud of?
On regrets, I don't allow myself the luxury of that. I think it's really important that in my job, I'm focused on the windshield and not the rear view mirror. And so I don't. I'm tempted to say regrets. I've had a few, but then again, not so many, or whatever the line is from that Frank Sinatra song. So I just think I'll have plenty of time for that after
I'm paying close attention right here. This is my zone of like, all right, either I'm adding or I'm cutting.
Berating yourself for the mistakes that you've made. You're going to make mistakes, and you're going to learn from them. Take it from an expert. I've made plenty, but I don't focus on regrets and things like that. Overall, in terms of what I'm proud of, I'm more than happy to talk about that.
Let's go for it.
Yeah, let's go deep there. Basically, I'll just say it's an incredible honor to do public service, as many of you will find out at some point in your life. I always wanted to do some of it. I saw these people around Washington who were well-known public servants like George Shultz. I would think that looks like a really interesting thing to do. It's different, in the private sector. I love my years in the private sector, but there really is a feeling of what you're doing is ideally helping all Americans and that kind of thing. It's a great honor to serve the public, and particularly in a job like this. So that is the main thing I'm proud of is 14 years at the Fed and 8.5 of them as chair. I'll always be proud of that.
And I'm very grateful to you for your service to our country.
Thank you.
So if you were willing to share publicly some advice that you would give to the next Fed chair, we'd love to hear it.
This is
so. One thing
it's
you
an
will
important
learn,
level. I'm really close to just cutting,
and they have their own.
I can't hold on to it for much longer.
Is never
wow, it's
volunteer
just
advice.
popping.
Only give advice when asked. So, and I would not. I will not. I would only.
Is something getting announced right now? Am I missing news? Because it doesn't seem like it's the Powell speech. Is there a military update?
It is very, very important to stick to your knitting. And to stick to the things that were actually assigned. And there's always a temptation to want to move into.
This feels like a news-related.
We have very powerful tools. They're supposed
Are you guys
to be
seeing any breaking news? Nothing's coming across the tape for me quite yet.
There's always a time when an administration looks and says, it would be good to use that tool for something else. What if we were just to
news is on. Well, clearly this is not the news moving it.
Happens all the time.
Obviously,
we just have
there's
to be in a
something else is going on.
We're not trying to be, again, we're not trying to work.
The 5-minute and the 10-minute are still bearish. Hence why I'm not out quite yet.
The other thing is
S&P 500 is pushing a bit harder, which is why I'm getting close here.
Don't look for perfection. What we do is very.
But if it fails right at 400, I could also add another.
It's a great American institution, and I'm very proud to work with the people I work with. They're extraordinary right across the board, an incredible group of people, and I'll just close.
Yeah,
by saying
all the news is related to Powell, but
to
something else
build
seems up.
Great democratic institutions, and much easier to bring them down.
So, though you were uncomfortable giving unsolicited advice to your successor, I know that the students in this room would love to hear your advice. They've asked me for my advice and asked me what you would advise them. So they're entering into.
There's a lot of sellers at 400, specifically 311 contracts to be sold at 400.
Is lower for many reasons. In particular, jobs that were plentiful a couple of years ago for students coming out of college are no longer so.
Let's see how it actually reacts to this key level.
This remarkable
we tapped it. Is it going to hold and break? Or is it a third rejection that snaps these recent lows? Your guess is as good as mine. I just can tell you this is key to watch.
600 students that sit here today, what would you suggest they think about as they embark on both academic and then ultimately professional careers?
Let me start by saying that I'm well aware, and my colleagues too are well aware of the current situation for students coming out. It's a time of
you have
very
400, but then the 50%
creation.
IB is 415.
And also you have AI going on. You've got the effects on job creation of significant changes in immigration policy, which have brought down both demand and supply of workers. The unemployment rate is really low, but that doesn't help you if you're coming into that kind of market. So it's a time when you're the business, I mean, there's a business
Those
cycle,
people
right?
got
And
run
you're
through
coming
at
out of the
400.
business cycle at a time when getting hired is a little bit challenging. There's also probably something more longer term, more secular that's happening and around technology and AI. So yes, it is a challenging time, but I'll say a couple things. One just is that the U.S. economy, compared to other major open economies and big market-based economies around the world, is just incredibly dynamic and productive. Since World War II, U.S., compared to other, again, large, mature economies, our productivity has grown at like twice the speed, for example, in Europe, and higher productivity is the way, compensation and earnings can grow over time. So it's an incredibly flexible and dynamic economy. It reinvents itself. Technology, it always comes from the United States. So just be optimistic about the medium and longer term. I'm very optimistic about the medium.
Dude, I'm not trying to be mean, but the past 2 days, it feels like you're just guessing.
Yeah, the other thing
Welcome
is,
to the world
my
of
observation
trading,
is
you
that,
dumb fuck.
These large
At
language
what point
models
has
make
trading ever
people
been
much
anything
productive.
more than
I feel like
guessing?
it's making me more productive because I can learn things really quickly.
Matt, where's your stop? I'm paying attention to this
And I talk
right
to,
here. The 50%
my son and
retracement
others
is
who
the
are
blue
out
dash
there
line
in
on the
world,
screen.
and I think if you use it well, it's making you more productive. So I think you're in a situation where you need to invest the time to really master the
Like
use
literally,
of these
when
new
has trading ever been
technologies,
anything more than
that
guessing?
should stand you in good stead. But there's no
God,
denying
people are
it's
fucking
a challenging
stupid.
time to enter the
That
labor
literally
market,
is
but
trading.
It may take some patience and all that, but in the longer term, this economy is going to give you great opportunities, and just be a little optimistic about that.
So when you talk about the longer term, are you talking about 10 years, 20 years, 40 years? Are you worried that there'll
Matt
be
guessed his way into 50K last month. Oh fuck, dude! Is there news? Like, what are these
horizon,
crazy
let's
fucking
say
jumps?
40 years, there'll be substitution rather than complementarity?
It's so hard to say.
I feel, is Trump talking right now?
A lot of people.
I don't think Powell is saying enough to do what's
Talking
happening.
about the sort of the next few years being.
All right,
big
this
years
is important to me. The blue dash line on
AI
the
to
screen
come
is
in,
the
but they're mostly
50%
talking about
retracement of the
existing,
IB
middle market,
high
sort
and
of
low.
middle management, back office jobs and things
Or
like
15.
that. I don't think it shouldn't have those kinds of effects on people who can use AI well and that kind of. I don't know, but so certainly the next few years look like whatever the effects are.
We're running our average up
because major U.S. companies, and we talk to a lot of those people who run those companies.
Traders are race,
they're all
Fed,
looking
hike,
at
bet,
what they
and
can do.
police,
And the truth is, they
chance
can
of cut
take out
this
a lot
year.
of jobs that can be automated by a very smart large language model. They just can, and they will, because their competitors are doing it, and they can't afford to have higher costs than their competitors. What's that going to mean for you? It may not mean that much. It depends on what you're going to wind up doing. You may stay in school a little bit, and you may do something.
400 I care about.
It's going to create new jobs, too, over time. And again, it makes people more productive. I did talk to a CEO in tech world who said the marginal benefit of a new employee in this world is actually very high. Now, that's not what you hear all the time. So
I'm watching 65, that is anchored VWAP, and I'm watching 46/50, which is session
This
VWAP.
has been going on for a couple hundred years, since the loom was invented, right? And to put all the people who were doing weaving out of business. But so in all cases, it has wound up raising productivity and raising living standards as long as the society keeps producing people who have the skills and aptitudes to benefit from that technology. So that will be the case here, but you're right. There can be a period during which it's challenging, and this may be one of those. But nonetheless, I would just say it's out there, and it's out there to be done. And I would be medium and longer term very optimistic about this economy compared to any other economy.
Terrific. Thank you so much.
Bullish on
looms. We're now going to open it up to your questions. So I think I've got Jason and David in the well, and I've got two microphones in the balcony. Why don't we start with Jason? Do you have a question?
I think I have a question.
Okay,
if that's
great, fantastic. We're going to let Jason ask the first question.
So, Chair Powell, when you're making decisions at the Fed, I'm curious, how much are you relying on very specific economic models? The Fed has its own big fancy model, Furbis. How much are you relying on information you get from talking to people out in the real world, to businesses, your own intuition and experience? What do you bring together as a way of thinking about these decisions with a role of economics, but everything else that feeds into it?
Oh, wait. Where were those people in chat? Oh, is Matt just guessing? I guess we'll never fucking know. Fuck you. All you motherfuckers in the peanut gallery. All you fuckers with your ass in the bleachers. This is why I'm on this side. This is why you're on that side. Fuck you pussies. Am I the best at this? Obviously. And yet, day in and day out, you fucking cucks come in here and try to question me. You try to question what I'm doing? How about you take a fucking second and you sit back and, maybe remove the thing that, your penis is so far into your pelvis, we're calling it a vagina? How about you just simmer down, Maybe don't have the training disposition of a fucking middle school girl and let the actual boys play here. Let the actual men handle this thing we call trading while the rest of you fucking cucks are crying in the corner. I see a little red. I see a little red. What am I supposed to do? What am I supposed to do? How about you shut the fuck up and you let the cowboys who've been at a rodeo once or twice handle the goddamn job? You pussies. Fucking crybabies in chat. A bunch of fucking crybabies.
Of the U.S. economy.
He's guessing. He's guessing. Yeah, guessing my way into a fucking Lambo. You pussies.
But that's so it's all of those things.
What do we do?
Thank you.
What do we do?
Okay, so David, why don't you pick the first hand, and then Jason, you'll get the second hand.
If you're personally offended by anything I've said, just understand trading is not for you.
My name is Fabio. I'm a first year studying economics and government.
Fabio.
I'm really interested in kind of the decision making in the Fed.
Why does he sound like a bro?
Work with situations where like the decision might be very tight and like sometimes there's like expectations of like
how do I handle this, Matthew?
And it might be very tight in those very tight decisions. Like how do you make
this is the
end
internet.
Up making the decision?
You guys are the reason.
So remember, I'm one of 12 voters.
I'm losing my hair.
So there's an FOMC cycle is about 7 weeks between meetings. We have
I'm
8
Fabio.
So. And I would say sort of 3 weeks before the meeting, by then, I have to have a pretty good sense of what I think we need to do. And staff will already have been working on
nothing worse
doing
than a bunch of fucking people crying in the casino.
Folks,
Folks, it says it on the door. No crying in the casinos. Don't be a bitch about it.
The probable thing we're going to do. And then I have to talk to everybody a couple of times because I got to get people to vote for this. And I've got a lot of it is finding out where the sentiment of the committee is. I've been working with these people for many years, so most of the time I kind of know how they'll approach a problem. That's how it works. So it's a lot of talking and listening and understanding. I think an underrated skill is in listening to people. Listening is, if you listen to people and you hear them and you can make their argument and they understand that you're actually listening to them and not just communicating at them, for most of the people, most of the time, that's going to be enough. And by the way, that's true on Capitol Hill. That's true. It was true when I was a governor. I always felt like Ben Bernanke or Janet were listening to me, and if they could engage with the points I was making, then I felt like I could.
Matt's underrated skill is listening. I'm so happy I don't listen to you fucks. I'm happy I listened to Sean on Friday. He made me 2K in options. But beyond that,
active dialogue
listening to you guys.
FOMC
I feel like you're just guessing.
All the senior staff who've been doing this a very long time.
No, yeah, because some people can fucking tell you the future and know where the market's about to go. What a dumb comment.
For example,
he's just guessing. Guessing.
Somebody who's been doing that for 30 years will tell you.
I'm unsubscribing because Matt doesn't know where the market's going next. It seems like he's guessing.
Over here.
Good morning, Mr. Powell. I wanted to ask you a bit more about private credit markets and particularly rising defaults among non-bank lenders like Blue Owl Capital. So I wanted to ask, to what extent could stress in these private credit markets spill over into the traditional banking system?
So that's the question we ask ourselves quite a bit. And, you know, as I mentioned,
I'm just guessing that you're
watching
not guessing
very
when I
carefully. Of
guess
course,
you're
you
guessing.
what you can read in public, we're also getting the backstory from the people who run these organizations and from all the banks. The supervisors are well aware of what the bank's exposure is and what is not. And, you know, I'm reluctant to say anything that suggests that we're dismissive of the risk, but we're looking for connections to the banking system and things that might, you know, result in contagion. We don't see those right now.
Contagion?
What we see is
COVID.
you know, a correction going
Order
on.
submitted.
And certainly there'll be people losing money and things like that, but it doesn't seem to have the makings of a broader systemic event. But again, we never give a clean bill of health. We just keep watching for that. We don't see those characteristics though right now.
Let's go to the balcony, and remember to share your name when you begin your question. Great.
Hi, my name is Cody. Thank you so much for being here, Mr. Powell.
What's going on at Harvard that they all sound like this? Is Harvard all right?
I know you mentioned that, you know, the Fed's job to do exactly what's best objectively for the American economy, but I'm wondering, you know, if
what
you're
about the
competing
Iranian
with,
economy,
let's say
brother?
China or other powerful countries, whether or not you would kind of, you know, cut interest rates or do something like that to stimulate the economy to kind of get ahead of other countries?
No, it doesn't. You know, we're always asking the question, as you suggest, you know, what we serve the American public always in all of our decisions, and what is best for them. How do we achieve maximum employment and price stability on a sustainable basis? That's what we're always asking. We do, you know, meet with, you know, in Basel, the central banks all meet without the finance ministries, and we can talk privately about what's going on in global financial markets. It is a global economy. We all know each other, and frankly, many of us have regular communications going on just privately, you know, or, you know, by telephone,
collusion,
email, and text, and things like that. But we're never looking to get on the turf of, you know, the national security people or the you know, the State Department or, you know, things like that.
Order
we're not
filled.
looking at things that.
You getting mad? I'm getting rich. You getting mad? I'm getting rich.
You are in the presence of greatness. You, my lucky viewers, are witnessing actual perfection. You're witnessing a cat who is jumping up in the middle of my speech. I get no respect. Fucking no, like, I can't get respect
Order
with
canceled.
you fucks in chat. I can't get respect with my cat when I'm about to make a speech. My wife's never respected me. What the fuck is going on in my life that I can't get one goddamn attaboy? Day in and day out, your boy is just... I'm done with this, dude. I can't, not a goddamn moment of my life is a fucking breather. This is insane, dude. Oh my fucking God. There's not one time in history that a person can continually make thousands and thousands of dollars live in front of people on the internet. And yet, I just... on the day of my daughter's wedding, the day of my daughter, nothing, dude. This cat, nothing, dude. She's like, "Sup, pussy? What are you gonna do about it? Oh, you're working? Oh, you're working? You're making money? Look at this cat. Does not care. Wife doesn't care. You don't care. There's nothing I can do to get people to respect the amount of work I put in. What are you doing, cutie? What are you? Are you just saying hi? You just saying hi? Oh." Guess what? You see all these people on the internet? They're fucking dumb. Oh, they accused me of guessing today. Can you believe that? They said Matt just makes money by guessing. He's just really he just seems like he's been guessing for the past couple of days. He's been guessing. Is he guessing? Is he? Look at that. Look at that claw, dude. She's ready to slit a throat. You angry? You gonna do something about it, tough guy? How'd you get so tough? Call of Duty? How'd you get so tough? Dude, I literally watched Lion King one time. Okay, maybe twice. And all of a sudden, she's popping out her claws at my throat? Her claws at my throat? Dude, nothing. Your boy. This is what I would say. This streaming is the hardest job in the world. The 2 hours I put in every Monday to Friday, excluding holidays, is clearly harder than anything you guys do at all. You think it's easy day in and day out to make tens of thousands of dollars to just prove chat wrong and then have a cat assault you? I'm just not getting the respect that I deserve. The internet just doesn't respect my game. Doesn't respect my what? You gonna talk shit now? You gonna talk shit down there? It's not an easy day. Not an easy life, you know? Not easy to be as breezy as I am. I'm done on the day, just as a fuck you to all you people. I'm tired of it. Let's see how much money I made. Let's see how much money your boy made. All right, we're taking a screenshot. I'm done trading futures on the day. I have shit to do. But let's do this. Let's do this. Let's do this. Let's see what the total is. What's the total PML? Let's see what we did, dude. You fuckers. He doesn't seem like he has a plan. He just seems like he's guessing. I bet his girlfriend's not even real. She's Canadian. That's what you guys sound like. Like, literally, that's what you guys fucking sound like. 25K. Fucking read them and weep. And I want to clarify, it would have been more had I not been frozen out from 10 of my accounts. You could have added another 15,000 to that because your boy would have copy traded on 10 more. So was it 25? Yes. Should it have been 40,000? Without a doubt. Bro, the market, they're doing everything they can to stop your boy from really flexing. Everything. But here we are. Hey, Matt, do you trade your own live capital? And when you think a trader should take this step? I'm getting moved to live with some of these SIMDA-funded firms as we speak. And when should you make that step? When you prove it to yourself that you know what the fuck you're doing, dude. Like when you consistently get payouts, when you're like not listening to the internet about how you should be trading and you have a verified system that is repeatable and you're just doing that time and time and time again. Folks, real trading is boring trading. Real trading is boring as fuck because you end up just doing the same thing day in and day out. And you're basically just doing your best to not let dum-dums on the internet dissuade you from exactly what you know you should be doing. You made $24,807, not $25K. I was actually about to be petty right there and just trade again to knock it over, but that feels like it's even a little bit too degenerate for me, and we are obviously way over on the show. But alas, it's a beautiful Monday. Happy Monday, March the 30th, and there is one thing that is once again etched in stone. I am the best live streaming trader. There's no one in this game who calls out the trades, explains the logic and the education behind it, or offering the education to do it, consistently making money. Like, it's just no one's at this level. No one can even come close to the Goonie community of what's going on here. Just no one. Literally, everyone it's a rush for a second. I don't care if they're bigger or smaller. Most are considerably smaller because we are the best. But then there's people who are very good at marketing who are either slightly bigger or roughly the same. But you know what's the one thing that they're missing on their shows? Actual profits, like actually making money and crushing what we call day trading. Folks, day in and day out, there's a good reason why it pays to be a Goonie. If you haven't already, show Lucid a little bit of love if you choose to buy one of their accounts today. Don't forget, 40% off, right? 40% off with code Goonie. Yeah, Lucid. I like the 150K flex accounts, but obviously use whichever one increases your odds of success. You're allowed to have up to 5 of them, 40% off with that code Goonie. If you want to trade with me, if you want to get mentored by me, this is not a signal service. If you're coming in there thinking, I'm just going to copy Matt, no, you're gonna fail. You're gonna blow out. You're gonna lose money. And even though I'm telling you not to do it, you're gonna do it. And then you're gonna get mad at me. And then I'm gonna call you fucking stupid. And then you're really gonna get mad at me. So let's just not even cross that Rubicon, brother. Why not think about it logically and think, okay, I want to learn the framework of how Matt approaches day trading, swing trading, investing. I want to see the moments of when Matt does well and understand the logic. I want to see the moments of when Matt's undisciplined and what happens in the breakdown and how he handles it and how he gets out of it. Am I a perfect trader? God, no. As much as I can be an asshole because my goal is to be profitable in the long term, I'm not saying every single trade works. No, that's not the game of trading. Maybe to some of the fucking half-wits in here, that might seem like guessing, but welcome to the world of trading. It is fucking guessing. That's what trading is, brother. It all has to do with, can you do it with reasonable risk management? So is it trading? Yes, it's trading. There's just a way that you could pull it off that is going to make you net positive the longer shit plays out. So if you want to learn a little bit more about that, GoonieTrading.com. If you have any questions, comments, or concerns for me, come to the contact page and this will come to me directly. More than happy to assist, help, clarify. So check that out. Overall, before I let you go, S&P 500 options flow is a little bit sketchy. Mag 7 is actually a little bit more bullish. And we're at the point in the day where we are just continually getting pinned to some form of equilibrium, specifically the two VWAPs, anchored VWAP and session VWAP. We are not really straying far away from it. So that's just the part of the day. So just be mindful of that. I wouldn't be so surprised if we do have a trend later today. I wouldn't be so surprised if it doesn't really show itself to its afternoon. Remember, midday trading, a lot of choppiness. Sometimes you get nice trends, but one of those, like, I guess from a statistical standpoint, not exactly what you want to be doing. And hey, look at that. We bounced right off the IB low. But anyway, that's what I have for you today. A nice almost 25K day for me, in the middle of you guys just making fun of me for no reason, which I thought was a little bit rude. But hey, that's just, I guess, par for the course when you have the world's hardest job, aka being a streamer. Folks, asshole, I guess, character aside, today's not the easiest day. We had a nice flush to the downside. It seemingly keeps getting rubber banded right back to VWAP, to equilibrium. So be careful about that. There is some weird disconnection going on with options flow. We're seeing some strength in the Mag 7, choppiness in the SPY. So I wouldn't be so surprised if maybe they attempt a recovery. Will they have success or not? I don't know. I'm just guessing. But I just want to point out that today isn't as nicely one-sided as you think it is. We're seeing some clear disconnection. So that means it's a good time to stick to your trading plan, respect your risk, and obviously size accordingly. Sizing being the most important thing you could possibly be doing. But most importantly, please be mindful of the choppiness of the day, the upside gap fill, the JP Morgan position expiring tomorrow. And there was one other very important thing. That there's a lot of puts in play, but it's almost like the put skew is weakening. So if a bunch of puts start to get sold, yeah, you could be in the situation of a Vanna rally. But I suppose if that were to happen, obviously, I will let you guys know about that. It'd be pretty evident of a bunch of puts just being sold and sold and sold. So just a couple things to keep in the back of your mind. And also don't forget that market is closed on Friday. In observation of Good Friday, this Friday, equities market is closed, even though we're still getting some important data drops the morning of. So equities market closed this Friday, yet we're still getting some data drops. So please do not forget about that. That's what I have for you guys. I appreciate all the good vibes. I hope you make a shitload of money. I hope you make double, triple, quadruple what I made. And remember, as much as it might seem like guessing, and I know I'm really harping on this guy, but I actually think it's like a good teaching standpoint. Yeah, the next bar, if you look at the odds of the market, the next bar, whether being red or green, it is 50-50. So it kind of is guessing. You are flipping a coin, but don't you worry, because you can still be net ahead with proper risk management. The best traders are the best risk managers. That is how you win at this game. You don't win at this game by somehow lying to people that you have a model that can predict where the market's about to go, because no one on this planet can predict what the market's about to do unless you're, I don't know, like the speech writer or the tweet writer for President Trump. So please keep that in mind. That's what I have for you. I'm going to go spend a little bit of time in the Discord if you want to join up. Shout out to Lucid. And hey, folks, tomorrow is the last trading day in the month of March. So if you're trying to be green on the month, green on the quarter, hey, I hope you crush it tomorrow. If you're already green on the month and already green on the quarter, well, maybe you just don't want to do much of anything and maybe you want to take the day off. So just a reminder of that as well. But overall, thanks for the good vibes. I'll catch you guys later. Peace.